Welcome to Wise Beyond Bitcoin, where you come for the crypto neo news, education, and opportunities. My name is Lucas.
And my name is Ryan.
And, we feel kind of obligated. We're excited to share this follow-up video on a video we did recently. Of course, we talk about a lot of different topics revolving around the macro outlook, what's going on in the world, the economic market, traditional side, and also blockchain, cryptocurrency, and the potential that this new technology has, creative destruction and alternative models, ways of doing things that could be more efficient. So that's our background and passion. We met in university studying economics and Austrian economics as well. So to be able to have a channel where we get to share our passion with others and about knowledge and education and the possible, or the potential, I guess, this has, and which technologies are most viable, which is why we talk about secret network, or the idea that practical applications need privacy to be practical. And so we look for those most innovative communities and technologies. We have covered Pulse Chain and Hex as well, because we're gonna do a video that specifically talks about the Cantillon effects and how this new revolutionary model that creates an inflation based upon time and that can't be corrupted, and it's decentralized and meets all those beautiful blockchain crypto model approaches, that there is a value and an innovation to be appreciated there. So we'll go into detail that. But we did a video already talking about the core concepts going into this before the debate, having a background in some of the claims Peter Schiff makes versus the intellectual, the philosophy, the schools of thought that he's known to come from, and also being familiar with Hex and ERC20 tokens, EVM smart contracts, and blockchain, proof of work and proof of stake. So it was our intention to kind of put a little background leading into it. But the debate, if you've watched it, we'll link it. It's absolutely, there's a lot you can learn from it listening to both. But we feel it's important to kind of do a follow-up, a critique, and a breakdown of this debate because of many of the implications or the claims Peter Schiff has made.
Right. And also our background, right? We're kind of uniquely positioned to kind of see both sides and have a foot in both worlds, right? We have a foot in the economic world that Peter Schiff is based his arguments in, and we have a big foot in the crypto world that Richard Hart and Hex and that community is involved in. So we can kind of see things from both sides. We have experience from both sides, and perhaps that's where our contribution can be different.
So check it out. If you like this kind of stuff, we have playlists. We do DeFi, crypto explainers, and we also do market outlooks. And, we cover the technologies that we think are going to grow and add value to the world and to those who participate as well. So check it out. We have done a recent video, and this is the follow-up. Peter Schiff and Richard Hart debate economics of crypto core concepts. And we're going to go right now to the actual debate. And after trying to get through some of it, I said, you know what, we're just going to have to Mystery Science Theater. Was it 2,000, 3,000? Mystery Science Theater 3,000?
I think it was 3,000.
I think it was 3,000, right?
Yeah.
So
yeah, it's been a minute.
kind of go into this because for many of those who don't have a background in either one, it's possible that we have a little perspective that can add value and shed some light. And there's so much happening in blockchain and in crypto and in the markets that we're not aware of because we can only research so much. We love, appreciate the comments and the interactions. So share a link, share an article, share something that you think would help us out or something to look at and research that we can bring to the table as an innovation or.
Oh yeah. Because like you say, we can only see so much and we're going to get things wrong. We're going to miss things. So by all means, interact, contribute. That's the name of the game. So let's jump into this. Peter Schiff, Richard Hart, Bitcoin or gold?
And we're going to do it at 1.75 speed. I recommend listening to our videos at a speed up too. That's just how we do research. Now, we're going to break down this whole thing because the questions, it seems like a slight bias from the host that played out a couple times, and we'll pause and break it down. But without further ado, let's just kind of get right into it.
I'm the CEO of the GoCo Group. I'll be your host today. I've got to tell you, it has not been easy getting these two men together. This event's been on, it's been off, it's been back on, it's been off. I'm pleased to tell you it's on. We have two heavyweight champions in Richard Hart and Peter Schiff going head to head today. This may never happen again. So let's sit back and enjoy it. Let me introduce these two gentlemen to you. Peter Schiff. Peter is an American stockbroker, financial commentator, and radio personality. He's a regular on television programs throughout the world for his economic commentary and opinion. Peter has been a financial commentator for over 30 years. This is when Richard was still wearing short trousers in primary school. Peter is a man who has seen all the major economic ups and downs. He certainly is a scarred economic general who has always been on the front foot of economics in the world. Peter has a reputation of going head to head with some of the most powerful people on the planet. And I can tell you, he doesn't lose very often. Richard Hart. Richard's a bit of the flavour of the month. He's the creator and founder of the highly successful cryptocurrency Hex. He's said to have a very high IQ and extraordinary ability in mathematics. This man has a herd of people who follow him around the world. He's like a god. However, many call him a gunslinger, a scam coin owner, a Ponzi scheme creator, who can be very rude, very abrupt, and very narcissistic tendencies. He's living somewhere in Europe, but nobody really knows exactly for his own safety. So, ladies and gentlemen.
Okay, just real quick, off the bat, from our background in economics and, Menger, Friedman, Cantillon, we'll talk about. I mean, you list some name did ever come across as a great mind in the world of economic thought, Peter Schiff, ever? Hold on, I can't hear you.
Sorry, I was muting myself because of the fact that I have a 4-year-old running behind the.
That's okay.
Anyway, I was going to say that he was not known that way, and he was known to be kind of the opposite, like somebody who made a bunch of calls all the time about how this was going to be a recession or a depression or inflation is going to go to double digits, and he would say this routinely and then be wrong all the time. Now he made one call that was right. He was really out front in saying that the housing market in 2006 and 7 was overheating and there was going to be a recession. And so he got that right. But it's one of those deals where it's like a broken clock is right twice a day. I mean, if you make enough of these doomsday predictions, eventually something's going to come true. That's similar to what you said, but let's not forget about all the ones that he got wrong, all the calls he got wrong. Right. So, and this introduction, oh man, and you couldn't get any more cringe. I can't even listen to this. It's like,
it's hard, man. It's
hard to listen to.
Richard Hart. I mean, the reality is, if you do your research in blockchain and crypto, Richard Hart actually has a history, whether or not you think Hex is a good, well-made product, whether or not you think it adds value. You could say, you know what? I don't think it's a good, well-made car. I don't think it's going to replace the T model.
Right.
But to call it as these scams, and you're a founder of all this, there are many people who say that about Peter Schiff. There are many people who say that Peter Schiff is just pumping his own bags in his company and just trying to get more people to buy, when he's not really adding value to help people in any way. And you look at Richard Hart's history, he has a history of being early on Bitcoin, being self-made millionaire, being very transparent, or whatever, being very transparent of how he's been at the forefront of certain technologies and generated his wealth. He's open about being a Bitcoin maximalist early on, and then later changing as he learned more. And then having seen both sides of it, from coming from a path of making mistakes and admitting his errors and therefore having wisdom, he decided to create something that improved upon Bitcoin, which is the idea behind Hex. But so the intro comparing, he compared him to Ali?
No, but he just mentioned a boxing match, but he didn't name drop anybody. But
no, he said George Foreman and Ali, right?
Did he? I don't know. I didn't catch that.
I'm getting ahead. So we'll continue it, but no, not yet. That's right. That's from earlier. We'll get to that. You can just
let's see it. Let's go. Let's jump in. But this is definitely an uneven introduction.
I want to say something. When I was a young boy, 16 years of age, I want to tell you a true story. Everybody loves a story. I remember there was this fight taking place, 1974. I was 16 years of age, and I huddled myself into this pub to watch this fight against a former world heavyweight champion, Muhammed Ali. And he was fighting this new, young, brutal George Foreman. They called it the Rumble in the Jungle. I can still feel the electricity in that pub as I speak to you now as a young 16-year-old boy. There was George Foreman. He had brutally, viciously mauled everybody he came across. And he was the world heavyweight champion. But Muhammad Ali said, I'll take you on. All the critics said Muhammad Ali could not win it. He's too old. He's done. He's over. You all want to know what happened in that fight, don't you? Well, I can tell you, I can still remember it. I don't need to read anything. I don't need to Google anything. Muhammad Ali came out and defended himself and didn't throw any punches for many part of the fight. And George punched himself out. And then all of a sudden, about the 8th round, Muhammad Ali let loose.
George punched himself out. Remember?
We'll see how that, if that is yeah, right. We'll return to that.
But the idea is the idea to compare Peter Schiff to Muhammad Ali is the only thing that this analogy has in common is age. That Peter Schiff is old and that Richard Hart is young. So therefore, Peter Schiff is
Muhammad Ali. Yeah.
Peter Schiff is Muhammad Ali, and then George Foreman would be Richard because of age. That's the only thing in common. There's Richard Hart. Peter Schiff is not known for being the Muhammad Ali of anything.
No. I mean, bad calls, maybe of bad calls.
Right. I mean, he owns Euro Pacific Asset Management, where he's constantly one of the many pundits or someone who pays to sponsor the channels to get up on television to talk about what he thinks is going in the market. So buy my company. But he literally has made a living off of shilling the value of his company by waxing philosophical.
By doomsday, talking doomsday predictions. Because think about it, the more fear you have about the future, the more gold and hard money makes sense. Right. And then the better that's what his company chiefly invests in. So, I mean, he's pumping his bags in that sense, right?
Right. So he's doing what he's just pumping his bags. But the Muhammad Ali, I remember as a youngin', my family, my dad very much was into boxing Muhammad Ali. And I did a report and watched a lot of those documentaries and videos. And I was a big fan.
Don't see the parallel.
I was just saying Muhammad Ali and Peter Schiff. I don't know who in the world of economics or in finance or in any, where he becomes Muhammad Ali. So, I mean,
we're not talking about Charlie Munger or Warren Buffett here, people who have made, just money after year after year after year, decade after decade. The sage of Omaha. Like, I don't know, you don't put Peter Schiff in that category, right?
No, not really. So already out the gate, you've seen talking about Peter Schiff being this economic giant and Richard Hart being this wearing schoolboy pants and being the leader of a scam and being kind of like a god is ridiculous, because following the people in the community, there's nobody, well, I say nobody, I can't say that, but the majority of the people that I've listened to and heard from in the Hex community appreciate the knowledge and the value added of what he's built and
right. And he's made people money.
He's made people that have actually cashed out for a couple of years now, many times over. Lives have already been changed. So that's I don't know if that's actually
so. It's definitely an uneven introduction to way too. He's lauding Peter Schiff in a way that doesn't make sense, and he's denigrating Richard Hart in a way that doesn't make sense. So it's the bias is evident right out of the gate, right?
Don't be fooled by that. What is it called? That thing you put in your pocket? So not lapel.
It's called pretentious. I don't know.
Oh, okay.
I don't know the word.
That looks way too nice to be blowing your nose on that thing. All right, here we go.
And he knocked out this young 23-year-old world heavyweight champion, George Foreman, in the rumble of the jungle in Zaire. How will today turn out? Will this old fox win? Or will this young gun actually turn the tables and mow the older economic man down? We're about to find out. Ladies and gentlemen, let's welcome, and I've got here Richard Hart and Peter Schiff. Are you there, gentlemen?
Yes, I'm here. Yeah, I'm here. Maybe you could just stop talking about how old I am. I'm not that old, Plenty people older than I am.
Well, we're kind of a similar age, mate. So I'm feeling, 60 is the new 40 or something, isn't it now?
Well, I'm not even 60 yet, sir.
Well, I am.
So you're the old man here.
Oh, steady. Anyway, Richard, good to see you. Thank you for being with us.
Pleasure.
Good on you.
Pleasure. Love to be here.
Look, what I want everybody to know that how this event started is that Richard, he put a tweet out and he said to Peter, I challenge you. Would somebody take it up? We took it up and we brought you two together. It hasn't been easy, but we brought you both together. So I want to thank you both for making the effort and giving us your time. Gentlemen, I have a series of questions. We'll run through them. Don't know how far we'll get with the questions, but I'll try and get as many done as possible. And you'll both have a chance to talk and rebuttal. Maybe if we don't scream over the top of each other, give each other a chance to explain what's going on. That'll be nice. Okay, are we ready?
I'm ready.
Okay.
I'm going to pause real quick and just say thank you to the host who put this together. and for Peter Schiff and Richard Hart coming out there and expressing their views, because the reality is it's through dialogue and through debate and argument where we all can learn and see where we may err in our perspectives and where others are right. And this is great. That's really what this comes down to. So gratitude and love to everyone involved in this. And it's good to know that everyone has a bias, whether we're aware of it or not. There's a bias. So just know your bias. We have a bias. Our bias is finding which of those creations in this new technology are going to be practical, real world solution. From our background in economics, we're more interested in the loom being created and changing the market than who has a license to sew or who has a license to make garments. So our idea is,
well, it's a liberating kind of value, right? Trying to liberate the common person, people who are not always at the center of the power plays and the decision making at the higher levels, and they get maybe frozen out of wages or whatever, right? Just trying to make a fair system.
To improve the institutions and the allocation of resources that are great and perfect the way they are based upon the systems we have. Like, you don't complain, you don't compare a horse and buggy to a car. The horse and buggy is doing great, taking people around and protecting them from the elements, and but when
cars are invented,
then you still have them around, but for more like romantic, hey, just for
don't stop the car.
For the car. So, all right.
Let's do it.
All right. You both believe in your respective investment vehicles. And please, I'm going to read from some notes here, so please forgive me. Peter, you're about gold, and Richard, you're about cryptocurrency. Peter, where do you see gold going in the next 12 months? And Richard, where do you see cryptocurrencies heading in the next 12 months, including Bitcoin? So I'll start off with you, Peter. Where is it all going for gold?
All right, well, first of all, let's put gold in its proper context, because I'm not all about gold. I'm an investment manager, and I've constantly or consistently recommended that people hold maybe 5 or 10% of a portfolio in gold. But the remainder of the portfolio is in income-producing assets, companies that I think have good fundamentals, that are growing their earnings, or paying good dividends. I look at gold as a proxy for cash. A lot of people are talking about holding cash now, not for the yield, because there is none, but for the optionality, because if stocks go down or real estate goes down, you can use your cash to buy these assets on sale. Well, I do the same thing with gold. I would rather be holding gold, waiting for better buying opportunities in stocks that I like or real estate that I like, rather than fiat currency, especially in an inflationary environment where it's the fiat currency that could crash rather than the assets. But if you're holding your liquidity in gold, well, then you're protected from inflation. And so that's why I like gold. I mean, I like gold as an alternative to dollars, as an alternative to euros, yen, any of the fiat currencies, and as an alternative to any of these crypto fiat currencies. If you think stocks are expensive, if you think real estate is expensive or bonds are expensive, and you want to have dry powder, then gold is a great place to keep it. Gold is an excellent store of value. It's maintained value over the years, over the decades, over the centuries. It's been money for thousands of years. So I believe that gold is a good, it has a position in a portfolio to act as as a store of value and as a source of liquidity. But over the long run, I mean, gold doesn't produce any income. It's not like real estate where you get rents. It's not like a stock that has earnings and pays you dividends. It's not like a bond where you can get interest, although today bonds pay very little interest, which is part of the problem. So over the long run, no, you don't want to just have all of your wealth in gold. You want to own other assets that will perform and deliver income. But over short time periods, if markets are expensive like they are now, and there's a potential for a rather substantial decline, having an allocation to gold makes a lot of sense.
Richard, everything you just said was very stupid. So this is going to be a very easy debate. I'm sorry for you guys. We're hoping for something very exciting. He just crushed his own argument in the first minute. I'm facing a guy that owns 10 to 20 times more not gold things than gold things, because he knows that those things are better assets. He says that gold holds value over time. It doesn't. Here's a chart of gold adjusted for inflation where you lost money for 40 years. 40 years, you lost money. 40. If you had bought gold 10 years ago, you're down today. You lost money from 10 years ago, not even inflation adjusted. So for a guy that doesn't even talk his own book, literally starts the conversation with, I don't even like this stuff enough to own more than 5 or 10% of it, it's going to be a very easy debate to win. And the charts, the facts are on my side. I got good news for you. Just because gold is a terrible investment, I may even own more than Peter with my $250,000 gold watch or my gold trinkets. I understand what gold is supposed to be used for. Gold is used as jewelry for 50% of its market cap. On Wikipedia, look up gold. You'll see that 50% of the sales of gold is for jewelry. And what is jewelry? It's just vanity. And what could be more willy-nilly and prone to fancy than vanity? So gold that he doesn't even believe in enough to own more than 5 or 10% or recommend anyone own more than 5 or 10% is backed 50% by people flexing and looking silly. I look silly on purpose, right? So, I mean, you want to see the hex chart? You want to see what the hex chart looks like? I'm looking at this. Here's what the hex chart looks like. Only up and to the right, forever. Like copper.
Before he gets into the hex chart and copper, he's made many great points, but it's important to note when this debate is being put out as if someone represents gold as hard money or as a better alternative versus someone who's trying to see the innovation in blockchain or cryptocurrency as a replacement for a medium of exchange or store of value, that Peter Schiff out the gate admits that he's not even coming from that perspective. He admits that even the gold he recommends is in mining companies or in stocks or in dividend paying investments. And it's only 5 to 10% of the portfolio, where he says the rest of it is in traditional financial dividend paying, companies or investments. So he's basically, as far as it being diversified, his diversification is almost 100% in the traditional financial.
Yeah, that's what I was gonna say. The gold bug argument has evolved to a standard conservative financial allocation sort of play. It's like, okay, well, that's not where you were at 10 years ago when I watched you on CNBC calling for $5,000 and $10,000 ounce of gold in a few years, and and selling and having the commercials about buying hard money, and that's so it's there's been an so just like Richard Hart has evolved from the Bitcoin maxi position, we could say that there's been a big evolution with Peter Schiff as well. True, and we see it right here.
But the difference is, people who don't know, Peter Schiff hasn't come out and said, you know what, I was wrong.
Right.
This is where I was wrong, so I've changed my views. Instead, he tries to use
a shell game. It's a shell game. Yeah. And I didn't change. I'm just elaborating now more details. And it's like, well, no, this is a different position.
What he says. That's basically it. I was always right. I'm just going to explain to you more detail, while it took you a long time to understand. It may be 15 or 20 or 30 years to prove my rightness, but I'm going to explain.
But anybody who's been following the debate for over a decade knows Peter Schiff from his days of hyperinflation calls and crazy calls with gold. So you can't forget that stuff. You don't just, it doesn't just get wiped out of the memory. It's like, well, no, you said this stuff, and you are a gold bugs. That's always been your position. But now when it comes time to debate, he's doesn't seem to have the courage of his convictions.
And I would say this, since he's someone who manages diversified portfolio assets, it would be silly for him, I would think, to not say there's a new emerging technology, since he's already investing in high risk company stocks, to see a new technology that could serve some value,
right.
And
especially when one of your core plays,
a small percent, I'm sure 5% or 2% in this ecosystem would perform the rest of his portfolio in a short time.
And here's why that makes sense. He's already got a big foothold. He admits 5 to 10% in gold and precious metals, which we just learned that 50% of that market is based in vanity and whim and jewelry and signaling, which is very reflexive, right? So the point is that he can't say that he's not involved in things that he can't say, I don't put money in crypto because I resist investments that don't have intrinsic value, because no, you clearly are into something that's very whim based right here. You've already said 5 to 10%.
Right. So
he's shooting them. There's definitely, I can see where Richard Hart's going with this. And I like the case he's building.
Here we go.
Gold. You bought gold 5 years ago. You were better off with copper. Copper you can actually use. Peter said, well, I don't want to cut Charles' arguments. I could just beat all his arguments now. What he would say is gold has value, Bitcoin doesn't have value, which is instantly defeated by the fact that you can exchange Bitcoin for gold. I remember back when Bitcoin cost less than an ounce of gold. Now Bitcoin costs 20 times.
Well, Richard Hart what's funny is that Richard Hart is showing a very strong understanding of economic theory when he's breaking down these answers and arguments. And Peter Schiff's
let's get into that, the value discussion.
Right. Well, like there, and we'll get into again later when he actually uses the words no intrinsic value. But the idea is that we live in a world right now. This is just the way the world works. It's a market economy based upon what's the utility and value that anyone will get at any point in time from something. And they make an agreement to exchange based upon that perceived value, what they can get, the use that you can get from it, that they appreciate. But new information comes. You learn that tomatoes cure cancer. The price of tomatoes goes up, and the industry's so that's markets. We learned later on that there's no such thing as objective value. There is no value of an ounce of gold in the Platonic ether that everything else comes from, right? That it's actually this dynamic emerging signal, communication, a language based upon the stock of knowledge that humanity, people, and the two individuals in that exchange have at any given point in time. So real value comes, it's like, you don't have anything until you make an exchange for it. That's where you have value. So if you have Bitcoin and you sell it and buy a home, you sell it and buy a car, you exchange for it and buy gold, that's value. That whatever
Right.
that exchange was is the only value that you can write down. And
Well,
you know,
yeah, there's even a term for it. It's called demonstrated preference, right? So when you see an exchange occur, we can't, from as a third party, we can't look at it and say, oh, well, that's equal value for equal value. That exchange had a certain value. It's only that you can say that those people in that moment had inverse preferences. They both wanted what each other had, and so they gave up what they had to get what the other person had, and they deemed themselves in that moment to be better off for doing so.
right.
And the value is always captured between their ears, and we only know about it as an artifact of the fact they exchanged at a certain price, and that price is the signal for what they kind of it's the only artifact that objectively captures that subjective perception that those two people had when they exchanged, right? So people get hung up on prices as being, well, they're objective. Well, yeah, they are, but they capture something that's entirely subjective. At the end of the day, it's nothing but what people believe. It's an opinion. And the price they exchange at can change from one moment to the next based on, like you say, changes in knowledge or whatever, various things. So this is all to say that if something gets a price, it has a value to somebody. And then by the nature of value being subjective and psychic and in the mind, there's no real basis to say that something doesn't have value if it's getting a price, because all you can say is, I don't value it. But you can't speak for others. Clearly, it has a market price. It's being traded. There is some people who value it. And so to say that thing has no value is kind of being presumptuous. And it's definitely going against the Austrian understanding of value, which locates it in the mind.
Right. And you brought up a good point. Right now, there are banks, even in his traditional market approach that he loves so much. He says, well, I'd put all my clients, and not even in real gold. I actually would just put them in gold mining stocks, 5-10%. And then I'd put them in a whole bunch of other companies that
in real estate. And yeah.
In real estate. So I forgot where I was going with this. What happens?
Well, he's showing that his appraisal of the value of gold is limited. It's not, he doesn't see it as the asset par excellence, the asset to rule all others. He sees it as merely a tool to get the other assets that he really wants.
Right. That's what I was going to explain. So even in those markets, thank you for saying that. That's why we do this, brother. So gold, you already know, has been bought with Bitcoin. We've already seen that in his markets, they value Bitcoin. The traditional markets value Bitcoin. The stock market, those micro strategy, you look at banks talking about adding it to their reserves in different, corporations already. So the idea that something has no value when there's already in the market for a long time, it's not like someone just started. We're talking about years and years of its value growing and growing with more adoption. And to just continue to just sit here and say something has no value, that's like saying nothing's burning when you're looking at something on fire right in front of you. I mean, everywhere around, people are valuing it. There's exchange. Right. You can link up your bank account right now. Your bank account, it's probably easier than it is getting something set up with him at Euro Pacific. Can someone get set up to cash in and out of the value of
no doubt
or other digital assets? So just to claim it has no value, it doesn't even make sense. It's just not. It's
an empty statement.
Empty statement. So we'll continue on with that.
Times more. You could buy in the top of, I bought Bitcoin at 30. I mined it at 50 cents. In 2013, it went up to $1,300, which was the price of gold. An ounce of gold was worth less than a Bitcoin in 2013, 2014. Now, an ounce of gold is worth 20 times less than Bitcoin. And so the fact that you can turn Bitcoin into gold at any time you want, I think his company even accepts Bitcoin to turn it into gold, disproves his idea that Bitcoin has a value. And I don't like Bitcoin. Bitcoin destroys the environment just like gold does. 50 to 60 people just died yesterday mining gold. Yesterday. How many people died mining Bitcoin? So this is a reality we live in. I've already won the argument. It's just a question of the audience.
And I do want to mention that as he brings that, I'm glad that actually Richard Hart brought that in, because when it comes to people recognizing the potential of blockchain and crypto to make the world a better place, a more ethical way, a harmonious way of living and sharing and storing value around the world, 5 to 10% in mining companies. Well, let's know that historically, mining companies, where these are located at, the people that are used, have a history of.
Yeah, it's like the diamond. Mining is not a pretty industry. There's slave labor, there's pollution and payoffs and corruption and smuggling, and it's not I'm glad you mentioned
that. I mean, the whole thing over. So that's also something to be cognizant of, and I'm glad that he brought that in.
If you're finished flattering yourself and congratulating yourself, first of all, yes. I just because I think that gold should be a small part of a portfolio doesn't mean I don't like gold. I just said that gold is not an investment. Gold is like cash. And right now, I think there are a lot of very good investments around the world that I want to own. Now, if I had a choice between just the NASDAQ.
He just said gold is not an investment at this point, which is
a big 180, but we'll continue.
Right. And gold, I would own all gold. But those aren't my choices. If my choices were all gold or all Bitcoin, I would own all gold. If it was all gold or all hex, I would certainly own all gold. I would own no hex. I would own no Bitcoin. But when I look around the world and I see a lot of good companies trading at very low valuations and paying very good dividends, I want to own those assets. I don't want to have everything in gold. Now, if things were a lot more expensive, I might want to up my allocation to gold, but I would never include hex in my allocation. I mean, you want to talk about what gold's done over a particular period of time. Well, yeah, if you bought gold 5 years ago, you had a great return. It's up 90% over the last 5 years. Over the last 10 years, no, it's about flat over 10 years. But go over the last 20 years. 20 years ago, gold was less than 300, and now it's 1900. So that's a pretty good return. Now, if you want to say, oh, what if you bought gold at its peak in 1980 at 800, you have a lousy return. Go back 10 years earlier and you bought it in 1970 at $35 an ounce and you had an incredible return. So you can always pick and choose whatever.
Go back to 1970. Look, if your argument for how something works is go back to 1970 and go back
in the 70s. Yeah.
If you go back to 1920, this is a great buy. It's like, brother, that's not going to help people today. If you're trying to tell people like
you got to wait 80 years for this to pay off.
Just don't you worry, because check out this. If you came in 70 or if you came in 1920, you're going to kill it, brother. That's not.
It was 20 an ounce back in the day.
Convenient for you, but the reality is you're so excited about how much hex has gone up. Hex is down about 70% from its peak. So there are people who bought hex who are down 70%. Nobody is down anywhere near 70% in gold. And the people who have made money in hex haven't made anything because they haven't sold, because they've locked up their hex in your scam of a CD. You've conned people into taking a worthless currency that you create for nothing, and they've agreed not to sell it. So you can keep unloading yours to the people who are foolish enough to think there's a free lunch.
Now, in this tirade of just character assassination, ad hominem attacks that are baseless, he mentions it a CD, which later in the video, he admits that it's not a CD, because ironically, he's the one who puts people into CDs to third parties that promise returns and companies. This is what he recommends. Whereas if you understand what hex is, in essence, it's not.
It's very different.
It's very different.
And we're going to get into that.
Yeah.
And they're going to get rich in your pyramid scheme, but they're not. They're going to go broke. And eventually they may come looking for you, because all the money that your followers are going to lose is the money that you're making. And we'll see how the authorities feel about that, when you end up in a court of law, because I know a lot of the people who lost money are going to be looking out to try to claw back some of their losses from your winnings.
Now, threatening legal action and making all these claims presumes that Peter Schiff actually understands blockchain and what Richard Hart is creating, and understands it so well that he compares it to the traditional market and says, this is a criminal enterprise.
Ponzi scheme. Yeah.
Which later on he completely goes back, and it's because you can't really hold on to that. This is just one big tirade and character assassination.
One thing I'll say before we continue is this is a very mean-spirited debate. Like if I get into a debate with somebody, this is not the tone I take. Sure. This is, it feels to me like, look at Peter Schiff. He looks pissed. And that's not, if you're angry, your mind starts to shut down. If you're getting yourself upset, you're going to lose that debate.
Sure. And
I just note that the tone could be a little friendlier here. This is supposed to be an academic thing. We're talking about economics and finance. Come on, guys. Why are we angry?
Absolutely. And look, the reality is that many people have cashed out of X and helped themselves and helped their families. There are many people on YouTube and posting videos and thanking Richard. The reason why people have respected Richard Hart is because he's been open about why he's doing and building what he's building. And
right.
Many people have benefited from listening.
And then to address the claim about the 70% down. Well, yeah, I mean, we're in a moment, but crypto does these. It goes up and it goes down. It has it's very volatile. There's times where it does drop 60, 70, 80%. That does happen. And you should take into the broader context that we're in the middle of a war, for one, and we've been in a bear market driven by people anticipating the Fed hiking rates and the shifting from easy money to a tight money policy and all what that involves. And plus all the instability with what's going on with politics and with inflation and with COVID. I mean, we're living in extraordinary times, and it's we're in a bear market. So to be down 70% on the price is, that's not unheard of. And it won't be the last 70% correction that we see in the space. But in the meantime, people who are staking are building their position. They're getting more. So while the price is falling, their position's growing. Right. So that does need to be brought up, that there is something else going on besides price.
And 70% or 80% down after 15,000% gains or 10,000%. He's not being intellectually honest. Like, he's cherry picking a small time when people bought the last peak of Hex. Well, Hex has gone up and down so many times in the last 2 years. You can take all these other times.
Pick a different number. Yeah, right. A different date.
Everyone's done well. And so, like you said, why are you picking the last peak at a time when all of the markets are reflecting and depressing and recessing from what's going on? So it's not being intellectually honest to the context of the market and the world
of where we're at.
We're at, and what's been accomplished with Hex in blockchain and crypto.
Where we came from. Yeah.
So what Peter here is doing is called a parade of imaginary horribles. So to the best of my knowledge, no cryptocurrency founder has been imprisoned for creating a cryptocurrency. Satoshi, who created—
I didn't say imprisoned, but I think you will be sued. But go ahead.
Okay, so let me give you an example.
I do want to mention one more thing. Ironically, Peter Schiff is the one who's in charge of other people's money. I want it to be clear. If you're watching this debate, you're wondering what these people do for a living. Peter Schiff manages people's money. He literally takes your money, breaks it up for you, promises that he's going to do great, get you a great return, and y'all will share in that together. And he manages your money. Richard Hart does not take your money, does not manage your money. He created a smart contract, which anybody can create a smart contract, put it on a decentralized ledger, said, this is how the contract works. This is why I think it's better than these others as a medium of exchange or store of value as a digital asset. And if you agree with me, this is how you acquire it in the most decentralized way through Uniswap.
He's not managing anybody's money.
He doesn't manage your money. He doesn't manage money. He's not in the business of managing people's money. It's impossible for him to manage someone's money. If he were to be gone tomorrow, the Hex contract would still be operating on Ethereum. Now, what happens to the OA, that's part of the conversation in the mystery, but that doesn't change that whatever the OA address, the originator address, whatever that distribution, does not change. They can't go back in the smart contract and say, you know what, this is the new inflation rate, and this is what it's set.
And that needs to be brought up, that, one of the innovations in Hex is that it created a digital investment replacement for money that has a built-in time value dimension, a built-in CD or bond function where you can, without having to turn to a third party, that's the difference here. You're not committing resources and trusting a third party, but you're able to essentially engage in the future. In exchange, you can say, I'm going to lock these assets up, and I'm going to get a future stream of income or a future reward, a greater number of these tokens. And it's through committing them to staking over time. So in the past, all money has never had that ability. If you wanted to save gold today and get a return, you would have had to loan those coins to a third party. Or if you want to do that with dollars, same thing, right? In this case, you can just do it right in your wallet. So there is a monetary innovation that's occurring here. And the other part, and the big part of it, is this programmed inflation rate, right? That it's kind of like, it reminds me of the Friedman monetary rule. Milton Friedman in the Chicago school, the monetarists, they took a look at monetary policy, and they thought that the problem was the too much discretion in the bankers' hands. That the policymakers had too much leeway to decide whether they should step on the gas or step on the brake, and that gave scope for error, right? Policy-driven errors as they overcorrected or overstimulated. And so his solution was, well, let's just program it and have a guaranteed 3% inflation rate, and that would take all of the question of, well, what's the proper rate? What should we do? It just removes that question. It's a programmed increase. Mm-hmm. And so, that, of course, that's not a very popular answer with people who want to turn to the central bank to finance whatever the, pet projects they may want, or who want to create a boom to help get their re-election efforts underway. But it is a sensible way to go about managing money that takes the politics out of it a little bit. But never would have been possible in the traditional system because of that because of what it was stepping on too many toes, right? And it just went too far against the grain of what we're used to.
And
so
the
that's
technology to sustain it. I mean, Bitcoin
right.
was the innovation of saying this is unhackable. It's a decentralized secured ledger. That model couldn't be enforced, even if you said, let's
right.
do this on what computer server, on what program, how is it be made?
Well, the point is you make the rule, pass a legislation that says, okay, that's going to be, the Fed's going to increase by this percentage. Well, who's to say that we don't run into a crisis, the politics change, and now we make a new rule?
Right.
Because it's always in the hands of the people who are in charge at the time. So to your point, there's no mechanism in the traditional system for this sort of thing to happen. It needs a smart contract blockchain foundation.
Right. And I think maybe that's where Peter Schiff needs to do more research, and he's clearly attacking something he doesn't understand, because Hex is not a CD or bond. It's not another company. Richard Hart doesn't take people's money and promise a return. It's more like you said in that Chicago School of Economics. It's a way of solving the inflation problem, which Peter Schiff is known for admitting and agreeing.
Yeah.
That inflation, central bank policies, and being able to, ad hoc just print money
creates bubbles, creates inflation,
is a problem. So to say that, wait, there's a novel way that we can use this instead of fiat, we can use this new thing, and you can still buy gold with it or do whatever you want with gold. But at least this new thing doesn't require people to go die in mines and dangerous places and destroy the environment in that capacity. There is a more novel way of having something that's not able to be counterfeited, that's not able to be,
it's decentralized,
and
code. Well, and how about this? How about the big one? The distribution of the new tokens, right? When the monetary authorities in the traditional system create a new amount of money, it goes into specific accounts and it gets injected in certain points, right? Usually it's through Wall Street, through the banking system and the connection to Wall Street investment banks. That's where the money ends up, and then it goes out from there. Well, that causes inequality, for one, because the people who get the money first, they're able to spend it before it has driven up prices. And they're able to essentially capture resources from at the expense of those who get that new money later on, after prices have reset and gone up. So there's this redistribution of wealth that happens when money is created and then distributed at certain points, right? And we've always talked about in economic theory, what are the consequences of this, right? And there's been the Austrian school, which Peter Schiff has been a big fan of, and he's out front, big fan of that. He'll tell you that in interviews, and it's just part of his background. It's why he's a gold bug, right? It's the economic theory that informs his gold bug views. Well, that school has made a massive contribution to the business cycle theory in economics. And one of their main points is that when new money enters the economy, as it is injected at certain points, it distorts prices. And these price distortions lead entrepreneurs to make decisions which are not sustainable given the true price system as it would be undisturbed. And so they make these adaptations based on this temporary price discrepancy, these signals that are flawed because of the effect of this monetary injection. And so they commit resources in new ways. And then this is how the bubble's formed. All right. It's an expansion phase. And then over time, prices adjust because of that injection effect peters out and wears out, and it ripples its way throughout the economy. The old price system reasserts itself. And then we see that some of these investments and expansions were mistakes. And so they're unwound. And usually that entails some kind of a deflationary recession, right? You get these liquidation cycles and deflation takes over. So this is part and parcel of the Austrian school theory. You learn about subjective value, you learn about money and inflation and prices, and you learn about injection effects in the business cycle. These are the core elements of Austrian economics. And this is what Peter Schiff comes from. So for him to not mention the innovation.
To add to what you're saying, this is, he talked about, you mentioned earlier, Peter Schiff is famous for calling the housing bubble. This is cool. This is why he was able to say, hey, look, there's a bubble. Look at this new money that's coming from the banks, and look at where they're allowing easy
and look where it's
credit.
going.
And look where it's going. So what's funny is he sees the problem with these effects.
He's applied the theory.
And yet
in the past,
he's not recognizing the huge innovation in how cryptocurrency, blockchain, and Hex in particular
solves this problem.
And
how does it solve the problem? Let's be clear.
Well, when you look at Bitcoin is a little different. That's the proof of work mining, which people can study and go into that. But the innovation, let's just talk about Hex. Hex is the most innovative of them all, whether it's proof of stake or proof of work, because Hex by code monetizes time, which means anybody, wherever you are in the world, no matter what your religion, what your beliefs, the color of your skin, your preference of who you would like to start a family, all of these things.
It's equal.
It's equal. It says if you lock up this currency for 5 years or 10 years or 5 months, you're going to get an equal distribution because you're taking some of that value off of the market today. You're delaying gratification,
right?
Which increases.
Well, let's be clear. Stakers receive a fraction of the new supply as it's minted, as it's created. It goes to the stakers, right? The people who secure the network, and it goes to them as a fraction of their contribution. So what it's doing is it's dividing up the new coin issue across the community equally, not based on politics or favoritism or connections or corruption, but just based on, you put $1 in, you're going to get a certain amount out, right? Well, that's what that's doing is it's taking the monetary increase that in the old system would have gone to a certain very small number of people. And now it's taking this process and it's extending it across the whole economy, and it's dropping it into everybody's wallet who's a part of the network. So it's like the quintessential helicopter drop that we used to talk about. If only the monetary authorities would just drop an equal amount of money in everybody's account, then yes, we'd have price inflation. But guess what? These injection effects and this redistribution of wealth problem wouldn't be there.
Right.
Of course, that was never possible because of political reasons, right? That's not how politics works. But guess what? This technology makes that a reality. But Peter Schiff, to our bewilderment, doesn't hit on this key innovation. And of course, you're not going to want to make the argument of your opposition, right? You're not trying to build you're not, when you go into a debate, you're trying to argue your own point. You're not looking for reasons why your opponent is correct.
Unless you're going to learn. And then,
unless you're going to learn, right?
That's you recognize that that's a good point. And I didn't think about that. And then you're building something together from different backgrounds. I would say that the more you listen to Peter Schiff, he's less of someone who understands economic theory and monetary theory and trying to understand how to, take that knowledge and make the world a better place. And more, like you said, pumping his own bags, because in the current traditional financial market, the way these effects, these Cantillon effects, who gets the money first, well, he's heavily invested in these sectors in the different markets, which the Wall Street and these markets are the ones who get the money first. So his whole company and business model is all benefits from the current monetary
distribution. Yeah. The ejection effects.
While he pretends to claim like it's horrible, these effects of, they print money and it causes these asset bubbles, he makes a living, he's positioned to do quite well in that world. Sure.
That's the point. And here's the other thing. When you take all this together, I would say Peter Schiff is too smart to be making these arguments, but maybe we'll elaborate on that later. But for his background and all the stuff he said in the past and the way he's shown familiarity with these ideas in the past, for him not to see these things and for us to see them so clearly, there's something's missing. There's something missing here. We're not there. This is, I think, we're not seeing Peter being sincere and giving his full, neutral, objective opinion. We're seeing a performance.
Absolutely.
And you can draw your conclusions on what his motivations are, but
let's get a little further into it.
The company that created cryptocurrency and got sued. Unregistered security offering says this. got sued, settled. EOS, unregistered security offering, raised $4.2 billion, settled for $27 million, and got a waiver to continue operating their business. And the reason the SEC is friendly towards and settles with these companies is because they actually do care about investors. And the investors don't want their money back because they all made money. People that bought EOS at the ICO made money and are still up today. People that bought Tezos at the ICO made money and are still up today. And so this idea that people are going to want their money back is factually false, provably false by SEC jurisprudence, by SEC case law.
They're only going to want their money back after the coins crash. See, nobody wants their money back when they're winning. It's after they crash and lose their money that they want it back. So we haven't finished this game yet. The air hasn't come out of this bubble yet.
Peter's talking about buying gold a long time ago. Gold was down. If you had bought gold in 1980, it dropped 70% until 2000. Because
the 10 years before 1980, it went from 35 to 850. So it had a spectacular rise, and it never went back down anywhere near $35 again. So you can't just look at these time windows and talk about, and I've already said, gold is not a long-term investment. I never recommend gold to anybody as an investment. It is a store of value. It's cash. Instead of sticking dollar bills under your mattress, you can have gold coins. They are much better to hold than fiat currency. But over long periods of time, you want to invest your money and let it grow. Gold doesn't grow. It just holds its value. It doesn't accrue value. It doesn't gain value. But it doesn't lose value.
You're down versus 40 years ago, inflation adjusted. You're down versus almost every
coins. No, you're not down versus. Gold is up this year. Bitcoin is way down. Your hex coin is down this year. Gold is up year over year. Gold is up.
No,
yes, it is.
Up this year. No, it's not.
What did it end? What did it end last year? I saw it was as high as like 49 cents, and I just checked it. It's 15 cents. So where did it end last year?
Hex went up 1,000,000%.
Where did it end 2021? Where did it end 2021? December 31st, 2021.
Here's the hex chart. December 31st, 2021 was 6 cents. Actually, half of a cent. Actually, based
on so it went down from 49 cents to 6 cents, and then it snapped back up to 15 cents.
No.
Well, I just looked at the chart on CoinMarketCap. I don't know. Is that not the actual chart?
It's a good site. Yes, CoinMarketCap actually has an accurate price chart, but you have to click log in the bottom right corner, or else it doesn't make sense.
Well, see, Peter's doing the same thing, because if you take hex and look at it in context and say, well, we'll go back further and look at the run, just like he's saying with gold. Well, it's the same story. It's like, yeah, they're both picking times where both assets fell, and then pointing to the past and saying, but look at the run up. It's like, okay, right. Well,
but the problem here, what's so funny is that Richard Hart just explained to Peter Schiff that when you go to CoinMarketCap, that you have to click log. And
right.
That's hilarious, considering if you've been in finance or
you should know that,
or markets, and you look at data, you should know to hit the log. So I just think it's funny that Richard Hart just
had to tell him that
you're at the right site. Just go back to it and click log, and then reread the data. And Peter Schiff just kind of shuts quiet and listens.
Yeah.
So when you compare an investment that isn't even an investment, Peter just told you not to invest in gold. It's not an investment. It's just a risk-off asset to just sit in to get.
Well, it's a store of value. It's a monetary equivalent. It's like holding cash, except instead of dollars or euros, which are just fiat, creations of a central bank, you can hold real money, which is what central banks used to hold. All these currencies used to be backed by gold and redeemable with gold. But the world has moved off a gold standard to a fiat standard. But if individuals prefer the gold standard, they can do it themselves. They don't have.
If individuals prefer the gold standard, real money. The idea is this concept of real money. He is making the claim that gold is real money just because you can trace a time when gold was money, but you can look at other things that have been used for money and claim that they're real money. At the end of the day, what is money is what is being used.
It's conventional. It's whatever the convention is in that place and time.
Right. And so the idea, hold on. And you mentioned it earlier, and it's a good point. His whole philosophy is pretty doomsday. The idea that things are going to be so bad. The reason why I keep gold in my mattress is because at some point in time, only the people who've got gold in their mattress are going to be able to buy stuff, because that's what everyone's going to be wanting to use again. So it's a black swan event to such drastic proportions that gold has now. And if you don't have gold, well, it's going to be tough times, and try to find those who do, because that's what everyone values for some reason.
And if you really want to confound these people, ask them, what backs gold?
Right.
Because he's like, but we'll save that.
The jewelry.
Yeah.
Have to hold government paper as money. They can hold the real thing. They can hold gold.
But the thing is that you suggest people do hold government paper. You just may not be aware of it.
When do I suggest that?
You'll see. I'm going to show you. Peter and I actually agree on some things. We both think that the government printing money left and right forever is disgusting and steals from savers. Do we agree on that?
Yes.
Okay. We both think that the value of the dollar over time is going to zero. Literally zero. Charlie Munger agrees with us on this. Do we agree on that?
Well, it may go to zero, but it may approach it. It's already practically zero based on what it was worth in 1913. So,
I think Peter and I both agree that we'd like people to self-custody their funds so that they can't be robbed by their banks. So there was some political activity going on in Canada where if people even sent money to other people so that they could buy food and eat, their bank accounts were seized under emergency action, as though there was some giant emergency like a war was going on. Everyone else has it bad everywhere else in the world right now, and yet there's no emergency actions in those countries. The Canadians are having their bank accounts seized, and I don't think Peter likes that. You don't like that either, right? That sucks. We agree on that?
No, I do not like what the Canadian government is doing. Not at all.
Yes. So Peter and I are both for self-sovereignty. We're both for people not being robbed by the government by holding the government's dollars. By the way, Peter's camera's frozen, so if you want to pan to me, my camera's not frozen.
Doesn't look like it's frozen to me.
Oh, you just came back on. Yeah, okay. And then, well, it's just when I'm talking, they're showing you, it's weird. No one sees me talk. Unless they're seeing something different on YouTube, whatever. So the point is, there's things we agree on, right? And we both agree that stocks have been wonderful investments, which is why I promote them. But there's a trick to stocks that people don't understand. When you used to buy stocks, you used to get shares in companies, and they were physical printed shares. And now when you buy stocks, you don't get the shares. Your broker gets them, but guess what? He doesn't even actually get them. A giant company in New York called the DTCC actually holds everybody's shares. And every once in a while, they do an audit and they discover, oops, people have been trading shares that didn't actually exist because neither you have the real shares nor your broker. And then the DTCC, maybe they have them, maybe they don't. And it's a giant house of cards. And you just hope that if when you go to get your money, they don't give it to you. Now you have to sue them. And you're basically relying on the government to handle custody for you. It's very similar to gold. I've got $4 million of watches. They're mostly gold. I know that platinum's a better metal for making watches from because I can use 95% platinum to make a watch. That's why it says 950 on it. But on a Rolex that has gold, it's only 75% gold because they have to alloy it with actually more useful metals to make a watch out.
They're not more useful. They have different properties. They're not more useful than gold. And by the way, if you have $4 million worth of watches, maybe in those watches there's $40,000 worth of gold. I mean, there's maybe about 10%. Right.
Yeah,
so it's not they don't so you don't have most of the but most of the value in a watch is due to the craftsmanship, the making of the watch. The gold is used because of its properties that make the watch better, that make it last longer, that make it look prettier. You can go swimming with the watch. It's like it's going to resist the water. There are a lot of characteristics of gold that make it appealing in jewelry. It's not used in jewelry by accident. It's used because it's very good.
Literally,
who cares? I don't know how much do you own. I don't know. You talk a lot. I have no idea.
If you go on my website, I do my YouTube videos and scroll down the info. I have the model numbers and prices of all the watches.
But who cares about how many watches you own? I got gold watches too. Who cares? I don't splash them all over my website. I mean, I'm wearing one. I'm wearing one, but I don't like flash them on my YouTube channel to show everybody that I got gold. But I wear them.
Okay, I've got another question.
I don't have a big gold pin there on my neck.
Let's move to the next question, gentlemen.
Why don't you wear some hats? Get yourself a watch made out of hats. Bitcoin.
Cryptocurrency was invented to solve custody.
Peter.
Because right now you don't have custody of your shares. The DTC.
Yeah, but when you have custody of Bitcoin, you have custody of nothing. So what? Who cares when you're custody of nothing?
Peter, I've got a question. I've got a question for you, Peter.
You can only sell it because there's a fool who wants to buy it, but eventually the fools will run out of money, or you'll run out of fools.
Gentlemen, let's get out of the jewelry shop. Let's have a chat about a few other things. Peter, can you keep ignoring the mass adoption of cryptocurrencies? We've got big institutions getting on board. Countries accepting Bitcoin as legal tender. You've got Bitcoin representing the fastest adoption of any technology recorded in human history. It's growing at 113% a year. Peter, do you feel you missed the boat and regret first of all, not investing in cryptocurrency?
Okay, so first of all, as far as ignoring the mass adoption, I don't have to ignore it because it's not happening. There is no mass adoption of Bitcoin for anything. You're talking about countries accepting, okay, El Salvador is trying to experiment with it, but that's one little country. You can't say that that's some kind of wave of countries making Bitcoin legal tender. Is Wall Street in it a little bit? Sure, because Wall Street thinks they can make a buck on it. I mean, they don't give a damn. And most of these big investment banks that are allowing their customers to trade, they don't trade it themselves. I mean, they're just trying to make a buck. They're operating a casino, and if people want to gamble, they're like, well, we're going to let them gamble at our casino because they may gamble at someplace else. What I will concede is that there are a lot of people that are gambling on cryptocurrencies, Bitcoin being one, but there's almost 18,000 others if you count all the altcoins, and then you can throw in all the NFTs. But what Bitcoin and other digital assets are used for is gambling. People buy them because they think the price is going to go up. People don't sell them because they think the price is going to go up. So it's all a bunch of trading. It's not being adopted for anything. That's all pie in the sky hype to try to justify the appreciation that all the pumpers are claiming is coming. And that's why people are buying it and holding on to it. Or in the case of Hex, they're getting paid to hold it and penalized if they sell it. As far as regrets, do I regret not buying it? Well, look, obviously I'm not an idiot. I mean, there are a lot of things with the benefit of hindsight. You can look back now that you know everything that happened and say, well, I could have bought this and made all this money. Of course, I could have bought Bitcoin when I first learned about it. I don't even remember where it was. I'm pretty sure it was below $10. I don't think it was below $1, but who the hell knows? It was so long ago. It's hard for me to remember. But all the problems that I had with Bitcoin when I first noticed it, I think are all valid. I mean, in fact, one of the things I didn't like about it, I said, well, what stops somebody from coming up with another cryptocurrency? And of course, nothing. And that was part of the problem. I didn't see any real scarcity in an asset that had no intrinsic value and anybody could replicate. I also didn't think it was particularly scarce just because there was 21 million of them.
We'll continue to say, I just want to bring up a point real quick. The market's proven him wrong on almost every point he's making. The idea that anyone can replicate Bitcoin, anyone who's tried has failed. Bitcoin shows that it has a value, a Litecoin, a Dogecoin, an Ethereum, anything that you make, while it may garner some attention or some value of an innovation or offering something different, no one can just make Bitcoin, copy it, and then say, look, I mean, even people who forked have tried to take it in it.
Yeah.
So
that's true. That's a good point.
And I meant to pause it earlier, but it's so lazy. And I can't believe Peter Schiff, and you mentioned earlier, he should be too smart for this. I mean, to say you spend your time in studying economics and value and Austrian economics, and then to just claim that everyone who buys something hoping that the value is going to go up is gambling. It's so disingenuous. He just basically everything is gambling according to his new definition of gambling.
Well, everything is gambling. That's one of the, that's what I'm saying. There's risk in everything.
But the idea, but he said gambling like a casino, and the idea.
Well, he's just being disingenuous.
He's being disingenuous. My point is this: when you go into a casino and you gamble, there are people putting up money with the idea. They know, like, I'm trying to take money from you, and one of us is going to win. And it's gambling is going into something with the intention of taking money from somebody else on the other side. When people put their energy, or they put something, when you call it
and
money,
they stake hex,
and they put it in something they believe in, that they think,
right,
wow, this is innovative, wow, this adds value, I think more people are going to like this, and more people will buy it. The network effects of more people valuing this innovation, but value growing from network effects, which is more people adopting, is not a Ponzi.
That's very different than gambling. It's
very different than gambling. You mentioned Ponzi earlier. All of these things are just so ignorant of markets.
And also, here's the other thing. We made this point before. What is there out there? What investment, what asset can you buy that has no relationship to how people feel about it? How your profitability, whether you make money or lose money on it, is independent of its popularity. Rather, we're talking about homes, real estate, stocks, bonds, gold, precious metals, crypto. It doesn't matter what you're talking about. There's nothing in the world that's traded and that's not essentially a popularity contest of some sort. That the other people's opinions about it don't matter, right? Because that's the nature of price, is that it's a appraisal, a social appraisal. Price is a social appraisal. It's a bunch of individual appraisals added together, and we settle on this. That's now the social appraisal.
Right.
And so I don't know how do you get out of anything that, how do you get out of that? You don't. I mean, there's some things that you could say there's a mass delusion, where they were talking about Beanie Babies, or in the .com era, there was stocks that were trading at high valuations just because they had .com in the title. Or people look like the Tulip Mania. Yeah. So there's moments where the collective maybe feels one way, and then shortly after feels drastically different, and things shift. That happens. But to say that that these things just have no value, it's wrong, because no, they're collectively valued through this social process, and in any one moment in time, the results of that, it has meaning. It's it tells you something about what people think and how they feel.
And to compare speculation, to compare entrepreneurial speculation and the decision making that people cast on a day-to-day basis as the risk that they take, hoping that delaying gratification here or there will benefit others, increasing value in the future. To compare that to gambling is just wrong. I mean, it's just wrong. It shows that a lack of research and understanding of the mechanics of hex or blockchain, to call it. Other than saying there's risk involved.
And he uses the reason it's because you're waiting for someone else to come around to sell it at a higher price, to buy it from you at a higher,
which is everything in his fund. If you're going to make money
gambling
in his fund, you're hoping that when you buy into his fund, that somebody a year later or 2 years later is willing to buy it at double the price or triple the price or quadruple the price.
Right.
So Peter, everything he is claiming is a problem with Richard is literally what he's hoping applies for him. He's hoping that a year or 2 or 3 years later, that some greater fools are going to come invest in his company and buy it these other. So it's even beyond that, just that the investments that they make as a management firm, the assets they add to their portfolio, they expect to be able to sell at a later date at a higher price. Right. Is that greater fool's theory? Or is that just prudent investment? Sure. It's really well, I think we did that to the death. We'll go on.
1 million is simply an arbitrary number of Satoshis. There's 100 million Satoshis in each one. And I know people say, well, but you can break a gold down into little tiny grams, and that's true, but they're no good to you. I mean, if you want to make a watch, you need a certain amount of gold. A little speck isn't going to do anything. But as far as Bitcoin, whatever I can do with a Satoshi, I can do with 100 Satoshis or a million, because I can't do anything with one, so I can't do anything with a million. So I never bought that there was any real value. What I missed was that this would become like tulip mania, that this would actually catch on and become a massive speculative mania. I did not have the foresight when Bitcoin was $10 to see this happening.
And pause
for 1,000, and then it pulled back for.
Didn't have the foresight. Let me address that. Okay, so you spent your entire career talking about the risks of monetary inflation, the risks of the boom bust cycle, the risks of monetary policy hollowing out savers, the risk of the way the injection effects of money and how they can create bubbles, and how that corrupts Wall Street and corrupts politics, and how that leads to wars and all kinds of things, right? And then you're going to say that when someone comes up with a digital replacement, a medium of exchange that's decentralized, that is programmed, supply increase, that nobody's controls, that code is law, and you didn't see that as being a novel investment that maybe meant something. And let's put this in context. This came out in the middle of the Great Recession, when the Fed was trying novel things, QE, and printing a historical amount of money. The housing market had just collapsed, and he was all over that. And then all in the response, and all the moral hazard and the bubbles that the response created. And then the inequality that we talked about, with the way assets went up and some people who had financial plays made like a bandit. But if you were a saver or a wage earner who didn't have a lot of investments, you had a redistribution of wealth, and you lost position in this period. So to have this be the context, and then for some set of people to innovate this new digital investment monetary unit that had none of those flaws, and you just say that you didn't see the value in it, and it took you by surprise that other people would see value in it, it's hard to believe. It's like, no, Peter, you're smarter than that.
Got to be smarter than that. And at some point, he mentioned earlier El Salvador and these other. He said, I meant to pause it then. He said it does not have mass adoption. This is what I was going to say. Can you imagine Milton Friedman or von Mises or Hayek, or to sit here and talk about there ever being some technology that competes on such a level with fiat currency that you have nations talking about adopting as legal tender? It's so disingenuous and ignorant. It's almost like, Peter Schiff, what are you even talking about, brother? Because how can you say this doesn't have mass adoption? You're not admitting you may have been wrong about the value of a technology, when you literally have central banks talking about adding it to their reserves. You literally have institutions that are already adding it to their reserve and their balance sheets. You already have.
Look at its market cap.
Look at them. You already have nations saying we're going to continue to, allow
and the speed.
Access.
And look at the speed of this. This thing came out in 2010, 11. It's like 11 years old.
The funny thing is that the only way Peter Schiff is right is if you allow him to just be right about the way he likes to believe things, because it has nothing to do with the way the world works. Like the world has already shown many times for years and months and weeks that they value digital assets and Bitcoin or Hex or this and that many times over, and they continue to show up. So for someone to just be like, none of these things have value, only the gold is la 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 la, it's like, you got to say, take your fingers out of your ears and just listen to the music, because right now it's pretty loud and pretty clear right now that people value this, and they value it worldwide.
Yeah.
200 or 300. I looked at it for a while, and I thought, should I buy this crap? It may have a big run. I could see all the hype and all the nonsense that people were saying about it, and a lot of people were actually believing it. But then fundamentally, I still couldn't get it, and I knew that I could never advise other people to buy it. That's what a lot of people do in crypto. It's all pump and dump. You just get in it, and then you pay celebrities to promote it. You give away free coins. Hey, pretend you want your salary in Bitcoin. It's all hype, because the only money that is made in crypto is the money that's lost. Somebody has to lose money for somebody else to make it. It's a zero-sum game. In fact, it's a negative-sum game when you figure out all the other costs, the trading costs, the marketing costs. Think about all the money that was spent last year.
Hit pause there.
Bitcoin and other cryptocurrencies.
It's actually not true, as I understand.
Well, it's not completely true, but there's an element of truth in it, that if it does happen to some degree. But think of it, where is that also? It's also true in the mainstream markets, right? If you take an option position, and you make money on it, guess what? There's someone on the other side of that contract that lost money.
Absolutely.
That's how the markets work.
The whole traditional financial market works like that, but that's open and transparent. Here's my point when I say it's not true, because you're right. There's an element of truth. What I'm saying is that in the traditional financial market, it openly works that way. Like someone's going to win and someone's going to lose. In Peter Schiff's world, that's how it openly works. Winners versus losers. In the world of blockchain and crypto, you do have rug pulls. You do have junk coins that are being promoted. Yeah, that happens. But you also have actually well-built good products that are offering utility, that are offering a service of value, so much so that more people are going to want to invest or join the community. So
let's be real clear about
network
something.
effect growth. People expect more value of network effects is not a zero-sum game. Let's just be clear that if more people join Bitcoin or Hex, this is not a system of losers that other people have to lose. It's literally the value.
Now that there will be an element of that, because there will be people who make bad decisions and buy at a point and then sell later at a lower point, and then they regret it, right? But that's not a built-in foundational outcome that just has to be for this thing to work. Really, that's just people's bad decisions, and we're prone to making bad decisions, right? We have biases. That's what people don't. That's why it's not popular for everybody to invest their own money. And there's a lot of people who make it a habit of investing other people's money, because the idea is that, well, they've got some skill set that everybody else doesn't have, and maybe they have control of their emotions, or they have some edge that others don't have. But in reality, that there's plenty of people who can just buy into one of these tokens, stake it, and if they stake it over a few years, they're going to get a weekly or daily or monthly allotment of rewards. And there's nothing about that increase in their portfolio that's coming at the expense of anybody else. It's based in how the tokenomics work, right? The new supply comes in and is distributed across the supporters of the network. So you do not have to have there's no exchange going on with other users. You're not buying or selling anything. You're just locking up your tokens and getting an income stream, like a bond, like a CD or a bond. So there's no reason for that to be described in some kind of zero-sum way, whereas your gain comes at the expense of somebody else, because that's not what's happening here.
Right. And that's the point what I bring up, is that it's just a mischaracterization of how the market works.
They spent a fortune pumping it up, yet everybody who bought is way down. I mean, the market's been killed despite record amounts of publicity and advertisement for Bitcoin. Now, so do I regret not taking advantage of other people's greed and ignorance? Yes, I could have made a lot of money, and I bought some Bitcoin and sold it. I have no idea.
By the way, look on TV. People have been advertising for gold and gold stocks and using markets to advertise to pump the values. Everything he layers is some great attack on the crypto market or blockchain. Almost all the time, it applies. Is already applied in a more egregious way, often in the traditional sector.
Could have sold it, and I bought some years ago. You don't know, would I have still held it if I bought it at $10 or $20? Would I still own it at 38,000 or 37,000, wherever it is right now? I have no idea, because I didn't do it. Right, and there's a lot of other speculative investments that I didn't make. That I could have made a lot of money on. Fortunately, there are a lot of them that I did make. I've made money in other things, and I've done well in other investments. Yeah, Bitcoin would have been the best investment I ever made had I bought it at $10 and sold it at 69,000 at the high. Sure, or even if I sold it today and bought it at $10. But I didn't do that. But what's going to happen to other people, what they're going to regret is not selling, because that's one regret I'm never going to have. But a lot of people are going to watch their paper fortunes completely evaporate. People are going to go from millionaires to nothing, and people are going to have a lot of regrets over the paper profits that they never realized.
Well, and even if that, we don't know what's going to happen in the markets. Let's be clear. This is not.
There are people there's folks who will meet that.
And we've been talking about what's going on with the world economy, as we mentioned in the intro, very well, that the markets can go down and stay down for a long time. And many people can look back and say, I wished I would have cashed out my Hex or Bitcoin in 2022 or 2021 before we go into a 3, 4, 5, whatever. But that is something that's happened in traditional markets. Look at depressions and recessions and the havoc, the damage that's caused to families, the redistribution of wealth, people jumping at, devastated from the losses and from all the leverage that's being pumped up in the bubbles in the paper market. So to just sit here and say all those people who didn't cash out when the price was high and they're devastated, it's like, well, that's tautologically true. There will be people who will feel bad that they didn't cash out when the prices were high, and they may have.
But show me a market where that doesn't apply.
Show me a market where that doesn't apply. You can say the same thing about everywhere in the traditional markets. Those people who bought the high and,
in gold in 1980. Yeah.
Right.
No, that was my question. So
I never see myself on this feed.
Oh,
you guys never switched my camera.
Yeah.
Okay.
Yeah. Cool. And can you bring the mic closer? It's just correctly.
It's going to clip more if I bring it closer, bro. I'll try and talk quieter. I'm flipping it by talking to them. So first of all, fear describes a problem that people do have in cryptocurrency, where they sell on a 1x or a 2x or a 3x and think that they're smart, and then it goes up 69 million x. So you could have bought Hex on January 5th of 2019 and sold it when it doubled, 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 when it doubled again, when it doubled, when it doubled, when it doubled, when it doubled, or when it doubled. It doubled 13 times in 2 years. And so you could have hopped off the magic carpet ride anytime that you wanted with insanely mad gains. And you could have been one of those red candles everybody hates.
I just have to pause it real quick because Richard Hart brings up a good point. In Peter Schiff, if you're one of the people that invest in his company, you should be kind of upset at this point at him just sticking to his guns of ignorance, because Peter Schiff has now come out and said, well, now I recognize, I just didn't realize the hype would last so long. And if I could go back, then maybe I would have done it. Well, now if you recognize it's hype, you're in charge of building the portfolio and the assets and diversifying and speculating on those things which grow. You admit that you missed out on an opportunity had you known. Why would you not, recognizing the hype that nations are now talking about adopting it and that it's going, why would you not say, you know what, possibly this hype could be another 5 years or 10 years or 15
that I don't see coming.
I don't see coming. And if I miss this hype for 1 year, and the growth in this market potential would be enough to come out, it doubles many times over, to come out and say, you know what, we've pulled out and it's all, you know, profit from here. We're letting it ride because we think this is so high risk and it's not going anywhere. But it wouldn't, you know.
So much. And people run into this problem when they reach cryptocurrency, they're not used to seeing millions of percent returns. Hex did 1,000,000% return from the bottom of the top, 623 days. And that's without staking. If you'd staked, you would have made 2x. If you'd staked longer, you would have made less. If you staked for shorter. He describes a problem where he wouldn't have known whether he would have held or not. And Hex specifically stopped him from his own weak hands selling his future gains. And this happens to investors time and time again, where they try and time the market only to discover what matters more is not timing the market, but time in the market. Time in the market with markets that have product market fit. They're on-ramping new users. They have a durable walled garden. Peter seems to think that you can copy paste a coin and instantly it's valuable. It's not true. When you copy paste a coin, you have a different ticker symbol, which means you have a different order book, which means you have different liquidity, which means you have different exchanges to trade on. The things that affect the price are wildly different. Now, look, whether you like Hex or not, fine. I'm also solving a lot of other problems. I don't like how electricity is destroying the environment. I used to mine Bitcoin. I used a lot of electricity to do it. It wasn't renewable energy. I think Bitcoin destroys the environment. I think gold destroys the environment. I think Ethereum destroys the environment. And I've already solved that. Pulsechain.com gets rid of all the proof of work destroying the environment to maintain a consensus network and just uses proof of stake. The same way that Hex doesn't require you to destroy the environment to earn inflation rewards. It just requires you to delay gratification to earn inflation rewards. So we have less negative externalities, which is why we have a superior price chart. This is gold versus Bitcoin. Gold goes up, or gold goes up a little bit. Bitcoin goes up a lot. This is Hex. Basically looks like a giant up and to the right. You got to put a log for it to make sense, or just compresses everything into a flat line here, which is useless to reason about. A flat line is a helpful in chart. Now look at it from launch. He wished that he had got in early on Bitcoin and Ethereum because he would have made hundreds of thousands of percent returns. This is Hex versus Bitcoin and Ethereum from their launch. This is the hardest possible time to try and compete with those currencies. This is when they have the maximum appreciation, the maximum up and to the right. We're beating both of them today after a 66% or 70% dip. When you zoom in, it looks like this. This is on a log scale. These are really big numbers. And so, you know, we're up versus Bitcoin at the top, 500x. It's 532,000% versus Bitcoin at the top. Now we've dipped. We're only at 150x. Yeah, 1500x. That's why big charts, right? We did the same thing versus Ethereum. So Ethereum pumps harder than Bitcoin, 3 times harder. So our gains versus Ethereum are about 3 times less. I have to hide my icing camera. And then this is us versus the dollar. About 1,000,000% versus the dollar. Now he's going to tell you these numbers aren't real, but guess what? They are real. When you create those red candles, everybody hates. That's you cashing out. And then you could go buy whatever Peter does. Like you like stocks that you don't know the shares to. By the way, as far as utility and stocks go, you realize that if you get a 40% share of your local Burger King, you can't change the prices. You can't change the hours of operation. You can't add an item to the menu, and you can't pull cash out of the register. And so this concept that somehow owning shares in a company is somehow more wholesome or better than owning part of a cryptocurrency, which may give you rights to control the consensus of the network, which may issue you trustless dividends with no middlemen whatsoever. And so I created something that solves a lot of problems that Peter hates. Peter likes self-custody. I solved it. Peter likes yield. I solved it. Peter likes delayed gratification. I solved it. But he just doesn't realize I've solved the things that he cares about. So I'm making people literal millionaires. And he says other things which aren't the case, such as some people have to lose in order for other people to win. It's not true. It's 100% not true. When your house goes up in value, who loses? When your gold goes up in value, who loses? When a baby is born or tree grows, who loses? They're created out of thin air. Trees are created out of thin air.
All right, you raised so many things that I got to talk about. I mean, first of all, when I buy a house, I'm buying a place to live. It's not about winning or losing. I get to use the house. I get to live in the house. It's a place of shelter. I can raise my family. And so, you know, the price is going to be what the price is, but the value of the home is the utility as a place to live. You know, when someone buys gold, you know, whether they bought it at a higher price or a lower price, you know, people buy gold and they use gold, right? There's a use for it. When you're talking about something like Bitcoin or Hex, you don't do anything with it. The person who owns Hex doesn't get any enjoyment out of the Hex while they own it. It doesn't throw off any income. It doesn't pay dividends. It doesn't pay rent. You can't turn it into a
It pays a reward. It's a staking reward. It's a bond. I mean, It's not technically a bond, but it's like a digital bond.
You will have.
So I don't know what he's talking about.
When you delay gratification through time and you unstake, you will have more Hex than you started with, and there is no intermediary to prevent that.
And I like how Richard Hart says that he innovates. He that Peter Schiff likes delayed gratification. and and Hex solves that. We talked about that with the bond, the time dimension that's internal to Hex, and how you can lock it up in the present and to get a greater future reward. The fact that he brings that up is actually very thoughtful, and it's not arbitrary because of the Austrian background that Peter Schiff has, and the importance that economic dimension, that school would placed on what they called time preference. They thought that civilization itself was predicated on positive time preference, which meant that people on net wanted to sacrifice some present thing for a future gain, present good for a future good, and to get more in the future,
and
right?
value
and so
things more today than they do at the promise or potential of having
right,
that same
that
thing.
They're present oriented, yeah.
So having
right.
that understanding of the value of time and which is why we're making this video in the first place, which is why we enjoy covering this, because having that economic and Austrian economic background, what was so exciting about Hex and what has been created is you have for the first time what Bitcoin, Ethereum, and these others don't achieve. It's equalizing, it's making more equitable the inflation that goes to everyone based on time. It's allowing the currency to grow and to treat everyone equally based upon their interpersonal relationship with time.
Which is huge.
That's huge.
In terms of money and institutions and evolution of technology and what that means for how resources are allocated, how incomes are allocated, the Cantillon effects, the injection effects and the price effects that monetary policy has in the traditional markets. That's a massive story. The inequality that comes from it, the political decisions that are made possible, the way that resources are allocated. You look at wars and you look at prisons, and people wonder, well, how did all this stuff get funded? Nobody could want this, right? Well, it's funded through this monetary arrangement where resources are acquired apart from the ability to tax, and it's like an implicit tax, and it's a way for governments to acquire resources and to control resources, and often they do it in a very undemocratic way. It's done at the stroke of a pen, a policy decision at a bank.
Funny, so you're mentioning what's called the inflation tax, and most people think the inflation tax is some kind of neutral thing where it's like, oh yeah, the inflation tax where they print a bunch of money and it is what it is. Prices go up, but it's not recognized.
But what do they do with the money is the question.
Exactly.
And when you have this innovation where that new money is out of their hands and in the people's hands, I mean, it goes without saying, this is a massive change for liberty and for liberating people.
Which is great. I thought it was great that Richard Hart said to Peter Schiff, you should appreciate this. And when you make money, cash out and buy more of your Euro-Pacific asset management, stocks or investments, but
whatever you want. Yeah.
Austrian economic or this purist background of wanting to see a more ethical, equitable monetary system. This whole end the Fed, Ron Paul,
recognize this is cool.
should just recognize that this is cool. Like actually, if money were to work this way as a technology, then this is probably the most cool thing to talk about in economics and monetary theory and money
in the last 100 years.
Or more for sure.
Or longer, yeah.
That's if you're a central banker. They were excited 100 years ago, but for everybody else, for quite some time. Let's keep going.
To do is hold on to it. And so the only reason somebody would buy something like Hex is because they think the price is going to go up. There's no other reason to buy it other than the fact that you think the price will go up. And the only way the price is going to go up is if someone comes around and pays a higher price. And why is that person going to pay a higher price? Because he is of the same opinion. He believes that there'll be somebody else to pay a higher price. But that doesn't work. That dynamic, that pyramid Ponzi chain letter dynamic does not work. It has never worked. I don't care if you put a chain letter on a blockchain. It doesn't make it work any better.
We talked about
worked for gold, worked for stocks.
But the idea of network effects and then slipping in the tongue, you're hoping more people will buy it so you can sell it at a higher price. Ponzi scheme, pyramid scheme.
But that's not what a Ponzi scheme is.
A Ponzi scheme and a pyramid scheme are not network effects. So that's why I pause and be like, this is just a shame. Peter Schiff is way too smart for this. Peter Schiff has to be too smart for this, unless he's just being a smart aleck.
So let's be clear what a Ponzi scheme is, how that is different. So a Ponzi scheme is a situation where a person says, give me your money, I'm going to invest it and give you a guaranteed return, a certain return.
Guaranteed.
And they make that payment not by making any kind of wise investments, but by talking to other people and getting them to agree to the same deal. And then they take the later payment, the later investment to pay off the initial investors, right? And then they always want to grow it, get another round of new investors to pay off the ones higher, the ones up the chain from them, and rinse, repeat. It continues until there's no more new investors to pay off the old. That's a Ponzi scheme, but it's very different from saying, hey,
and a pyramid scheme, same thing.
Or a pyramid scheme, yeah, which is not the same as saying, hey, I'm going to invest in this thing, and if I'm right about its popularity in the future, I'll make money.
Right.
Because that does not involve defrauding anybody or guaranteeing anything or taking money from one investor to pay another. It's really just saying, I'm going to make a call. If I'm right, I'll make money on it.
Right. And the sad part, it just goes to show that Peter Schiff really doesn't understand how Hex works. He just has arguments, he has beliefs, and he's going to defend his previously held notions regardless of what new information comes his way. That's
and regardless of whether it jives with what he knows about economics and Austrian economics.
Right. Because a lot of what he's saying is just wrong. Just wrong in any sense of the term. Right. Now, Hex, to be clear, if you lock up Hex, it is done by code. There is no middleman. There's no intermediary, not Richard Hart, not a group of tinkerers anywhere. You are guaranteed to receive by the inflation of what's paid out to stakers.
The supply.
Lock up. You're guaranteed to receive more. So it's not a Ponzi scheme. A Ponzi scheme can't guarantee. They have to get money from somebody else in order to do this investment.
Well, let's make this clear too. The guaranteed return that Hex offers is in terms of Hex. They don't make any dollar percentage gain return claims. No. So they're not saying you're going to get 100. If you put $100 in, you're going to have 110 tomorrow. Right. That's not the claim. The claim is you put in some Hex, you're going to get more Hex. And whether or not that trades at a higher or lower dollar value in the future is an open question. Right. No guarantees on that. Right. So that's clearly very different from somebody who says, hey, I'm going to give you an opportunity to earn a certain amount of dollars guaranteed. That's not what we're talking about here.
And so now we go back into entrepreneurs, Kerzner, speculation, and those risks that are taken when people delay gratification and they invest in these things that may be high risk or little understood by the rest of the world in hopes that it will be known about more and the value will be perceived greater in the future. That's so different than to call all of these economic decision-making processes all gambling, Ponzi scheme, pyramid schemes is disingenuous. And
it's stretching the term.
The whole philosophy of economic theory and human actions. Like, what's the point?
And it reduces all of society to fraud. Everything that is traded in the commercial life is now fraud, according to Peter Schiff.
There you go.
And you can go backwards and you can say, yes, look at all the money people have made in Hex. Yeah, this is money on paper. Most of the money has never been realized. It's just still sitting there. And what you do is you keep inflating the supply of Hex, creating new Hex out of thin air, which costs nothing. And then you give all the people additional Hex. You don't give them additional money. They're not earning interest the way a CD because you're not making loans and earning anything. You're just creating more Hex. I agree with you. I don't like the whole concept of proof of work for Bitcoin. It is a waste of resources, a waste of energy. It's like digging holes and filling them back up again and claiming, well, I work. Yes, you work, but you produce nothing. What's important is not that you work, but what you produce. When you mine an ounce of gold, the world actually has an ounce of gold that it can use for something. Gold is a very useful metal. And when you mine gold, you are helping the world because you're giving the world a metal in a form that it can be used. When it's still buried beneath the Earth's surface, mankind has no access to that gold. But once you bring it out and you refine it and you have it in a way that you can add it to those mirrors. We just launched the biggest telescope into space, and they were able to coat the mirrors with gold so that they would work a lot better. Gold has a lot of value, and it's worth the resources that we expend to get it out of the ground. And you're talking about stocks and saying, oh, there's no difference between owning a stock and owning Hex. When I own a company, I own a piece of a business that I like, and I'm entitled to my share of the profits of that business. Now, I agree in this casino of a stock market that the central banks have created, you have a lot of people that are not buying stocks for the same reason I'm buying them. They're just buying them because the price is going up, and they think the price will keep going up, and they ignore the fundamentals. They ignore the losses.
Hold on, pause that. So he buys companies he likes. I guess he likes the cut of the jib of the CEO, or he likes the way he parts his hair, or maybe he likes the company's mission statement, or maybe he thinks the business park is well manicured and decorated or landscaped.
Go up. He does not,
but not because they're going to earn money.
Right. That's not why he buys things. So
he's different.
I'd be running out of his company. Like, wait a minute. Does my CEO not believe in making money? No. Peter Schiff, no. He's not about price going up.
He just buys companies he likes.
He just buys things that he likes, right? And he likes gold because they just made a spaceship out of gold. Didn't you hear? I think he's been watching too much James Bond. He's starting to look like one of the villains too.
Goldfinger, yeah. All right, hit play. Let's keep going.
Maybe that was Austin Powers. I don't remember.
I'm looking for value. I'm not just buying hype. I'm not just buying momentum. And in case you haven't noticed, that bubble has popped. The momentum has left all these stocks. They're imploding every day. And the same thing is happening with cryptocurrencies. I think what you're going to see in the world of crypto is people selling the fool's gold and going into real gold, which is why the price of gold keeps going up as Bitcoin and other currencies keep going down. There's now actually a negative correlation between Bitcoin and gold. In fact, you can tell what gold is doing on any given day by looking at Bitcoin. If Bitcoin is up, gold is down. If Bitcoin is down, gold is up. That's how it's trading. So it's clearly not digital gold. When it's the mirror image of gold, it's fool's gold. It's anti-gold. And the people who think they're holding digital gold are going to wake up and realize they've got nothing.
Gentlemen,
I can answer that. Hit pause there.
Listen,
You know what else trades inverse to gold? The DXY, the dollar index. What's going on is gold is not money. Gold is like a bond. It's a risk off asset. It's a safe haven. People don't go into gold when they think that the markets are, when they're optimistic about the future and they think that commerce and economics are proceeding along the way they should. It's a counter play. It's you go into gold when things are doing bad. And so it goes up as the dollar goes up, right? They're moving together. So, and crypto is moving with the stock market. It's moving with, and it's moving inverse with the dollar. So what crypto has become a play that people get into when they're optimistic about what's going on. It's a risk on asset. It's the expansion narrative, the bull narrative, right? So the reason they trade against each other is because crypto is being seen more as like a stock, is like a share of this emerging technological ecosystem, and crypto is seen as like a safe haven for market disruptions. So of course they would move counter to each other. And yes, Bitcoin is called digital gold, but it doesn't mean that it should just track it, that it's not this, that it's the same as gold. It's got other, it's very different. It's got properties that gold doesn't have. And so there's no reason to think that just because it's called something that the prices should therefore track each other. Right.
It's about its potential, its use as a reserve currency, and its unique ability to not be counterfeited. It's certain features of it as a money potential. That's why it's called a digital gold. Ironically, he keeps talking as if he's representing gold and gold. But from the very beginning, if you remember, he seems to be so adamant about defending the value of gold, but he owns 5 to 10%.
Right. And let's make, and the rest is in
portfolio. In most of it, I think he says later, if he hasn't already said it, but most of it, he says it's in mining stocks and in dividends. Right. He says, whoa, gold, I don't recommend too much gold. I mean, put it under your mattress. It's a store of value. But what I recommend is gold mining stocks and things that pay.
And that's just 5 or 10%.
And that's only 5%.
The rest was real estate and companies, right? And he mentions, while talking about this, just as right before we paused, he mentioned that the central bank has turned even those markets into gambling dens and a casino-like atmosphere, right? Which is something we've talked about a lot too. So to have that understanding of how flawed that traditional system is, and to admit that it's a gambling casino fueled by central bank disruptions. And well, hey, guess what, guys? If you think that's a problem, check out what's going on in crypto. There's an off ramp to this whole thing. Maybe it's not perfect. Maybe it's not the final form. Maybe there is hype. Maybe there are rug pulls and scams and hacks, and maybe there's things that need to be worked out. But if there was ever a path forward out of the wilderness of central bank dominance, this is the path. It's not through voting. It's not through calling a representative. It's not through running to become a member of the Fed. It's not going to be through any of those routes. It's going to be through disrupting and to technological innovation and entrepreneurship. It's going to be the Richard Harts of the world that create the future monetary regime. If it's going to be a future
where
code
is law, where code is law, and they're not in charge. Where they're not in charge, they created something to let it exist. And
we're not going to get there by people going out and buying gold.
And to go back to that, he says in the very beginning, I see gold as just a store of value, and put it under the mattress, it'll perform better than cash. And he calls it real money. But in this belief of it being real money, the best case scenario of gold being a better money is if it's in a market collapse. He's basically saying, if the whole market collapses and what everyone uses for money just completely breaks down and we're in complete chaos, Those people who put gold under their mattress are going to have an easier time being able to exchange for goods and services, because now all of a sudden, everyone who has food and everyone who has real estate
is going to want gold.
They're all going to want gold. And if you have gold, you're going to be like the Scrooge McDuck or the...
Sounds like greater fool's theory to me.
It's greater fool's theory that he's helping on. He's like, don't worry. The world's going to be so bad that people are going to be willing to pay a lot more for gold than those fools who are buying it now.
Well, you know, another element of this whole gold is money theory that he's running with. I remember one of the definitions of money, one of the central characteristics, that's the word, central characteristics of money is that it's the medium of exchange.
Right.
Well, if you want to spend your gold, you first have to turn it to dollars. You have to exchange it for actual money, right? I mean, there will be a few people here and there that'll take what they have and sell it for gold, but more or less, it's something you have to exchange and first get cash to buy to make your exchanges that you want to make. So that's the money. It's the thing that's the medium. But now it's compared to crypto. There are ways of spending crypto directly. There's websites that you can. Overstock takes it. You can use Venmo and PayPal and swap between. There's homes and cars that are listed that you can sell for crypto. And there are debit cards and credit cards that you can charge with your crypto and spend like cash. So this is all to say that if you're talking about a spectrum that an asset falls on, whether it's money or not, in terms of how liquid it is, I would put crypto as more money-like than gold on that spectrum because of how much more liquid it is. It's easier to spend directly than gold.
And it's funny that you mentioned that aspect of it, because if you look at the fungibility and how liquid it is, gold hasn't been that liquid for quite some time. Even in Peter Schiff's world, I mean, you go back to the 70s, that's when the gold window was shut for other countries being able to accept it. People were only allowed to have it in limited jewelry uses for a time before that. And there was a time when it was seized and made illegal to hold. So this idea that right now gold is recognized as money. It's like in history books, maybe among people who have lots of it, it's recognized as some historical, precedent for the money that's being used today. But the idea that gold is money is not.
It's antiquated.
It's antiquated for sure. And it's not something that the world's ready for, right? It's not, if there's you don't have markets and shops and people ready to get their scales out and let's get back down to the grams and make sure that this is real gold. And,
no,
I think that's hopefully not the direction. That does not look like a way moving forward with the economy and growth. That looks like that might be a darkening of times if that were to be.
If there's any gold in our future as a monetary medium, it'll be custody. There'll be gold custodians, which have, some kind of a debit account that you can, where you can spend your credits, right? Or maybe it'll be digital, digital gold that'll be people will be spending, but the custodian will have the actual metal. Because are you going to want to first of all, there's the division problem. If you want to buy dinner, it's $50 or $60 or $100. How do you pull that off in physical gold? Are you going to break off a perforated, a sheet of gold that you carry around and have so many grams? I mean, it's clumsy. Right. So the digital revolution is not going anywhere. Right. If gold is in some weird future narrative where gold becomes money, it's still going to be a digital version.
And then you go back to that centralized security problem, which moving to a digital ledger doesn't get over the fact that you have to pay someone to secure it. And there's that central party weakness, trust. So, yeah.
Just from a technology side, there's a bit of a sound issue. Peter, can you turn your sound down a little bit? Can you ask your people to do that?
Am I too loud?
Yeah, it's a bit too loud and it's interfering on either side. And on the other side, Richard, is your volume able to come up a little?
Sure, but I am already clipping. So
he seems pretty loud to me. I hear him.
I am clipping. So I don't think
it's
not really any louder.
Just Peter down a little bit. Richard's good. That's what I think the people are saying. Okay, I've got a very, very important question for you, Richard. I want you to listen to this very, very carefully. X has been called the fastest growing asset ever, but also been called the greatest con of all time. Richard, you have a lot of loyal evangelists, but you also have a lot of detractors. And people calling you the biggest scammer of the century, running the largest pyramid Ponzi scheme in history. How can we believe you're not the greatest scam artist to ever live? And I want to add one other thing. Richard, I'm an old financial planner. And I've sat around the family.
Couldn't you just say the exact same thing to Peter Schiff? Because there's so many people who think that Peter Schiff goes out on television and says things that are doom, gloom, and absolutely not true. And he gets people to invest and then lose a lot of money in the traditional market system, which historically he has done that. If you've listened to Peter for a long time, you haven't fared so well. In fact, if you've listened to Peter, your family has suffered, you have suffered, you have not done well financially to be able to take care of people. And so,
and you know what, there's another point I'd make. This gentleman asking this question, posing to Richard about being the head of the greatest Ponzi scheme of all time. He's sitting in front of a big gold, what's that brand behind him, right? He's a gold bug. This is Gold Channel. The narrative of gold bugs is that the Fed is the biggest Ponzi scheme of all time. So let's keep our narrative straight here.
Right.
But go ahead.
Yeah. And it also, this is one thing I was going to say. A Ponzi scheme, once it's recognized, it's over with. That what's so funny when people just use Ponzi scheme as an insult, the ignorant might say, oh, it's a Ponzi scheme because someone said so. No. When you find out something's a Ponzi scheme, it's over with. Like that's the problem.
Because the new investor, it sours the new investors.
Yeah, you can't just have people saying, "Yeah, look at the books. It's a Ponzi. This is how it works." The idea that it's a Ponzi scheme is already proven wrong. You can look at how Hex works, and it is not a Ponzi scheme. So the interviewer asking this question, "What do you say to people who call this a Ponzi scheme?" is like, "What do you say to people who call this car a horse because you claim it has horsepower?"
Well, here's what I would say if I was Richard Hart. I would say, well, let me hear their argument in terms of what elements of my system have Ponzi-like qualities, so I have something tangible to talk about. And once I hear the case against me,
sure,
I'll respond.
But
just saying that there's this claim that's hanging out there, if it's not going to be described in any detail, then I don't know it doesn't have merit, and it's not really worth defending yourself. It's like you only defend yourself against claims that are well-founded,
right?
That have evidence and there's reasoning behind it. But just saying that okay. There's nothing.
Because you ask the question doesn't mean there's any substance to what you're saying, basically.
Exactly. Right.
I'd be happy.
And don't presume there's substance when there's not.
Right.
On the kitchen table with the mum and dad in the suburbs of Sydney, after there's been a market downturn. And I've seen the wife cry, and I've seen the fear in the husband's eyes when they've had their superannuation wiped out. I've seen the darkness and I've seen the pain. Richard, do you understand the responsibility you have to people around the world with what you're putting together?
Before Richard answers this, I would like to just state, from a market perspective, Richard has no responsibility. And everyone who jumps in to Hex is aware that Richard has no responsibility because it's a product that's already been created and it's out there. Whether or not it's successful and more people choose to, partake and join the community, that's up in the air. What's funny is that the claim that he's making about his family being devastated due to the financial downturn and what's going on in the market, that's the market that Peter Schiff represents. Peter Schiff actually represents being the head of a company. Give me your money. I'm going to invest it for you to make money. Oops, look what happened to the market system. It popped. Nothing I can do about it. Sorry, guys. Nothing here. So the market that he's talking about, what he's laying at Richard saying, how do you feel about this? It's like, I think you need to be asking this question to Peter Schiff, because Peter Schiff is actually the person who runs the company in charge of other people's money, claiming to them that he's going to help them protect them with his knowledge of markets. He's going to protect what's going on.
And to go further, there's no chance that Richard Hart's Hex isn't going to live up to its promises of paying out a certain rate of Hex.
Yeah, it's guaranteed.
It's a riskless endeavor. Now, whether or not that's going to have a dollar return associated with it at a certain rate, that's good. That's another question. Sure. But it's open. It's open and enclosed case. It's a closed book. It's going to pay out at that rate.
But it just goes to show more of the bias in the setup of the interview. It starts out claiming Peter Schiff is like Muhammad Ali, which I don't know. I don't know. A lot of people in boxing are like, hold on, who's this Peter Schiff guy? I don't know about all this. And then later leveling on Richard Hart. Are you ready to deal with the trauma of people losing their life savings? And it's like, why are you putting all that on me, brother? I literally created a transparent, this is what I've done. It's a smart contract. It's been audited. It runs on its own. I'm not in charge of your money. Buy it if you like it. Don't if you don't like it. And
Yep.
this is what it does, how it works. I think it adds value to the world and to the market. And this is why that's completely separate from, hey, everybody, invest.
Give me your money. I'll invest it for you.
Give me your money and I'll invest it for you. And the funny thing is that if you look at Peter's record of investing your money, it's dismal over the last 10 years. There aren't many people to come out and say, I bought my yachts and I bought my cars and I saved my family and I'm able to take care of myself because of what Peter Schiff did for me. If he did that for you, you must have started with millions already and was able to generate something off that at the right time. But here you're seeing many people's lives being changed in a short period of time, where even if the carnival were to stop tomorrow and the whole cryptocurrency market turned out to be an experiment, there are still in this grand experiment more people in this short run, the last 2 years, who have actually cashed out and lives have changed.
Right. Because of this whole thing.
Yeah, what you just described is called a security. It's a regulated activity. So when you put your money into a common pool with the expectation of profit solely from the work of others, or there's critical entrepreneurial or managerial effort, you have a regulated activity. That's called security. Hex is the opposite of that. If I die right now and Hex.com goes offline right now, it doesn't affect anybody. You mint your own rewards using your own labor, your own effort, very similar to what Bitcoin miner does, except instead of destroying the environment, you just delay gratification and wait a little while. You mint your own rewards in Hex. No one else gives them to you. So I don't do any work for you. None whatsoever, which is why you don't see me doing things that other cryptocurrency founders do, talking about fake partnerships. Like they shop for their employees at McDonald's and they say, we're partnered with McDonald's. And they're not, you're scamming. Or they say, oh, we're going to add these features, Litecoin's like, oh, we're going to add confidential transactions. Never happened. Scam. And then you go look at the wallets. Vitalik sells Ethereum. Chainlink sells Chainlink. Charlie Lee, Litecoin sells the top, right? Makes the top. Both Vitalik and Charlie have sold the top on their respective coins. But then you look at the Hex market and you analyze all of those coins that were tied to the origin address, and they've never been sold in the market, never. And so everything that we do in Hex is better. We have a 100% uptime. Does your bank have 100% uptime? No, it doesn't. Does Visa and MasterCard have 100% uptime? No, they don't. And cryptocurrencies obviously have value because they replace payment networks like PayPal, Visa, MasterCard that you are slave to. And if they don't allow you to transact, you have no more freedoms. The freedom of transaction is the basis for all of the freedoms. You don't have freedom of speech if you can't drive to where the speech is happening. You don't have freedom of assembly if you can't drive to where the assembly is happening. You don't have freedom of movement if you can't pay for them to print your passport, which is getting more and more expensive. If you don't have the freedom to transact, which less and less people every year, all of us are nearly banned at every moment. You say the wrong thing on social, you're banned. You say the wrong thing in Canada, they come to your house and knock on your door and beat you up about it. And by the way, in Canada, do you know if you try and buy gold, you have to pay GST? And there's only a very, very, very minute subset of gold, which is finer than 99.5% pure, which is exempted from that debt or GST that you call it. When you buy cryptocurrency, does the government put you up for 20% on the end? No, they don't. No, they don't. Because cryptocurrency is a superior product. And Hex monetizes time. Pulse chain removes all the destruction of the environment as the world's largest free airdrop. A lot of people forget Hex was given away for free. If you had Bitcoin, you were given Hex for free. And at the top, it would increase the value of your Bitcoin by 20%. 20% free extra Bitcoin. And Bitcoin ran up 15x from the COVID dip. Ethereum ran up 50x from the COVID dip. Hex ran up hundreds of X. We're outperforming everything. And that's just one of my products. You know, the Hex Charms will get 40,000 people, and Pulse Chain's got 65,000 people. Over $1 billion has been sacrifices for freedom of movement, freedom of speech. And
I would just like to stop right here. And this is another part where I feel like Peter Schiff should come out and say, wow, that's innovative. And that does add value to our current financial system from an economics perspective. This is a potential use case that I can see value. How can you come from an economics perspective and see, wow, people can transact whenever they want without intermediaries. The bank can't freeze your assets and prevent you due to political reasons. All of these features are what Bitcoin and blockchain, that's what the problems that they sought to solve, this new alternative ecosystem. And like he's explaining, trying to help teach Peter Schiff and the host, if you are even aware of the problems with energy or the centralization of power and miners and proof of stake Ethereum, Hex has even taken those problems and made improvements. So it just monetizes time and solves all that, because unlike proof of stake networks, which it's not, it's a proof of stake smart contract. It does not require people to stake to secure the network. It's 100% secure, has 100% uptime, and is 100% guaranteed to return that hex at the computational rate, depending upon all those out there staking. So that's innovative. And that's the idea of, wow, how much value do people place on being able to exchange whenever they want without barriers and without,
you wouldn't think that this point would be something you would need to tell a libertarian Austrian gold bug.
right?
You would that the value in separating finance from the state and keeping a freedom of access, freedom of speech, freedom to exchange. These are not new ideas for libertarians. They certainly aren't new to Peter Schiff, and it's just mind it's a head scratcher. Why we're even having to tell him while it's even a question. Peter Schiff should say, well, hey, at least these things are cool. I have issues with this over here, but let's acknowledge what innovation this is. And he won't even do that. So it's disingenuous.
That's why it feels disingenuous, because for those who are familiar with his background and who he's rubbed elbows with in economics, that
and his influences.
A lot of what he's stating is contradicts that understanding. So unless you're saying, well, then why would he say it? Well, if he's trying to pump his own bags, if he's trying to increase the value,
greater fool's theory,
of this company, greater fool's theory.
He needs another round of investors.
Exactly. Recognize it. I've invented solutions to things Peter cares about: self-sovereignty, removing middlemen, efficiency, getting rid of environmental destruction, giving people yield, getting people to delay gratification, putting people in charge of their own finances. No one can stop you from paying yourself your own rewards. I have solved all these.
Richard, you solved the problem of how to make yourself richer, but you haven't solved any of the problems that I'm concerned about. And I agree. You're defending yourself by stating that based on the Howey test, hexes are not a security. I agree with you. I don't think you're selling unregistered securities. But what you are selling is a pipe dream. What happened was you gave away a bunch of free hex, but the majority of the supply of hex were retained by you. And what your goal was to get the price of hex to go.
So just so you know, in the beginning of this interview, he does call it a CD. He does call it a Ponzi scheme, and he does call it a scam. And then now, of course, after so much information has been shared and knowledge about it, he is admitting it doesn't pass the Howey. I admit it's not a security, and I admit these other things. But now
it's a pipe dream.
But now it's a pipe dream, right? And so that's the idea, is that Peter Schiff doesn't really have a consistent viewpoint. And a lot of what he states are ad hominem attacks, or they're just beliefs that have no substance when you peel behind the veil.
Oh, it sounds good. It sounds good if you're not educated on some of this stuff. It sounds plausible, but it comes apart when you really analyze it. And that's what we're here to do today.
Go up so that other people would buy the hex that you want to sell. And you've done a good job of promoting the coins that you want to unload. It's basically a pump and dump. You want to pump up the price of hex so that you can sell. But of course, you don't want competition. You don't want all the people who got free hexes to sell theirs. So you convince them not to sell by promising them even more hex if they wait. Well, while they're waiting, you're selling. And eventually they're going to get left holding a bag of worthless hex, because the supply is going to keep on growing, and they're going to keep on holding and hoping. And one day people are going to want their money, or they're going to need their money, and they're going to try to sell. And all the paper gains are going to evaporate. And the only people who would have made money were those who didn't wait, those who cashed out earlier. And that was the point I made earlier.
I wanted to agree. I used to feel the same way Peter does. I really did. I was a Bitcoin maximum. I was like, you know what? Everyone's going to fall into one thing. And then reality proved me wrong, and I had to change and update my worldview. In fact, the more altcoins there are, the more useful fun things there are to do with your Bitcoin, then it just stays in the ecosystem. So like when you go to a casino, they never show you the clock because they want you to stay and keep playing. And so designing systems to prove value for shareholders is very similar to designing an economy or to designing a cryptocurrency. And yes, I appreciate your compliments that I've designed something that is extremely sticky, that gets people to delay gratification, that gives people hopes about the future, which is why I have seen people whose lives have been saved by hacks that I couldn't save with my self-help books.
How many hacks have you sold personally?
If you look publicly, it looks like zero, but I can't tell you because how
no, that doesn't.
You follow the OA wallet, it appears to have never sold anything.
So you've never sold any hacks and taken any cash? You just have all the hacks you started with?
Let's go over the rumors.
I'm just asking you a question.
I'm answering your question with more words if you relax.
And this is kind of a weird twist of the debate, because it's kind of perverted. Never does Richard Hart say, what do you do with your money and what's going on with your personal investments? So it's just kind of weird that Peter Schiff turns and says, have you ever sold it? What have you done with your hex? Because what he has or hasn't done with his personal amount of hex really has not much to do at all with the conversation as the technology of what hex has to offer and its comparison to gold or as a money.
Well, let's see what he says.
Hex launched, you used to be able to turn Ethereum into hex directly in the contract. There's a rumor that there was like 1 million Ethereum generated. There's also a rumor that I got that Ethereum. There's also a rumor, which I can agree with this one, that I've been mining Bitcoin, or was a Bitcoin miner back when it was 50 cents, and mined full 50 Bitcoin block rewards more than once a day. I myself with no pool, because that's how easy it was back then. I've also been a retired multimillionaire for about 20 years now, having 150 employee marketing company in the United States, where we sold mortgages, miracle cleaners, sex toys, cash advance loans, you name it. So
what's that do with my question?
Well, your question is, have I ever sold? And when I'm telling you, if you look at all the coins that were associated with some type of founder thing, none of them were sold.
So your answer is no.
As close as I can to getting.
Well, it's a yes or no question.
Howey test. I can't tell you.
No. The Howey test has nothing to do with
value based on what I do. No, if you think.
No, but I'm not asking.
What I do. It's an expectation.
No. The Howey test has to do with work effort that you are expending on your part. If you simply tell people how many of your own. No, but if you just simply admit
about your future behavior is.
No. I'm not asking you what you're going to do in the future. I'm just saying, have you sold any of the hacks that you created and gotten cash for it, or some other cryptocurrency? It's just a yes or no question. You're not violating the Howey rule by telling me. No.
So, okay. So you think the price went up 1,000,000% because I was dumping my bags? That's what you think?
Because personally,
you said that
personally,
I want the price to go up. So you say,
so you can sell. You want the price to go up so you can sell. Why else would you want the price to go up?
Why would I sell the world's best performing asset when I own other?
So you can do something with it. You can't do anything with Hex. Obviously, the people who are buying
$1 million for charity.
Well, good for you. But the people who are putting their money into Hex intend to sell one day. They want to buy something. They want to buy a house. They want to buy a car. So they have to do it. But you're telling me you haven't sold any. You don't want. You just have all your Hex.
I've been retired for 20 years, bro. This for me isn't about the numbers. It's about doing more. I want to change the world. I want to make the world a better place.
Well, I don't think you're going to make it a better place by conning them into buying Hex.
Because you're the guy that's been wrong for 20 years. You've been
wrong for
20 years.
No, I haven't. I've been right. I've been right a lot. I've been pretty right over that time period. You know, have I gotten everything right? Have I gotten all my
20 years ago? You're still breaking your balls. Okay, I have I've been a success. I've been a large success than you.
If you don't count your Hex, I don't know if you have more money than me or not. I'm not counting the value of your Hex.
Let me know when you're at 27 million for charity.
I wouldn't count that.
What 27
You don't
million?
understand how Hex works. Hex is virtual lending, but you don't understand the.
No, there's no lending. Who are you lending
Yes,
to?
there is. Listen, when you lock up your coins, do you think that value just disappears? No. The value is transmitted to the only people that can harvest it, which are the people that aren't staked. And the people that aren't staked get diluted, a form of payment, a form of interest.
Right, but they can sell. No, they can sell.
They are staked. Correct.
Yes, but you're just transferring. It's a transfer. That's what I said.
Correct.
You're transferring it.
Yes.
No, but there's no real value being created. You're just transferring.
Peter Schiff is explaining it and not admitting it. He's saying that you're transferring value to the people in the present by delaying gratification, by locking it up. Rich, they're saying the same thing. Peter Schiff's just not admitting that this is the innovation, that this is the value.
Well, he's saying it's zero sum, but there's no real value being created. But clearly there is, because you can see that there's been lots of people who've benefited from it, and you can look at the market cap of Hex.
Right. But
wasn't.
Also, there's an actual transfer of value. So if you lock up value today, in order for you to earn the inflation rewards, you have to delay gratification.
There's sacrifice.
What do we know about the supply of money? This is what I'm going to go to, Peter Schiff. What do you know about the supply of money? If I were to burn 50% of the supply of money, what would happen to the value, ceteris paribus, of the rest of that money?
It'd go up.
Okay, so what happens if your model states that in order for you to earn inflation, you have to burn money today, and you're not allowed to get it back until it unlocks in 1 year, 2 years, 3 years, whatever you choose.
Well, it's deflationary.
Right. So you are providing a service. You are providing a service to the present consumers, because to the present consumers, by you delaying gratification, you are actually transferring value and allowing them to appreciate more value today.
Yeah.
So this notion,
because it pulls it out of circulation.
Because it pulls out of circulation is brilliant. That's the whole. That's the whole supply function of the time delayed gratification. So for Peter Schiff to say, you're not adding any value, all you're doing is transferring value, it goes back to, what is value, brother? Of course, that's what it's doing. He's literally monetized time.
Well, he created a demand, a natural demand for the money to be held.
Right.
And if you think about it, that's very important for a money to be, for something to even become a money. There has to be a demand for it, and not just a hot potato thing where the second you get it, you're wanting to get rid of it. Right. Like you want a good function. Yeah, exactly. You don't want the Dogecoin tokenomics. You want people to be incentivized to hold it over the long term, because that creates the network effect problem that we're talking about. So yeah, I mean, it seems like the criticism is really a compliment, but that's okay.
Yeah. Frigging around among the various people who own it.
Why don't you understand that your virtual concept of value in your head is not as real as the price that you can sell things?
No, because you're confused.
Is real.
Yeah.
There's a difference between price and value. That's right. Price is not value.
That's what you get.
Right. And when you buy
that's
Hex,
true.
Price, but you get no value. There's no value in Hex. There's no value in Bitcoin. But there's a price because there's somebody willing to buy it. Sure. But that price might not exist tomorrow when people no longer want to gamble, when the illusion wears off. I mean, at some point,
the top of the day. I called the Bitcoin top on the day, and I've done this 2 cycles in a row. While everyone else is telling you about $100,000 Bitcoin, $1 million Bitcoin, I'm telling you that this is the top, and I published a chart, and I've done that 2 cycles in a row. You call the top every single day because you're new to it. It doesn't know about technical analysis. It doesn't know about fundamental analysis.
So where's the bottom? Okay, so what's this is me? All right, so where's the next low then for Bitcoin?
Traditionally, Bitcoin dropped 85% after a parabolic blow off top. This cycle it should go down to about 11K.
All right, that's a reasonable expectation.
Agreed.
Because
it has been doing for decades.
And what's going to happen to Hex? What's going to happen to Hex?
Hex continues to have giant dips like it always has, but it also makes new all-time highs. You got 80% dip only cancels out a 5x pump. And when you have a 1,000,000% pump, you would have to drop 99.999% to cancel it out.
But just because Bitcoin or Hex has come back from a previous crash doesn't mean it's going to come back from every crash, because one crash may be the final crash. So you're saying that so Hex is guaranteed to go up?
No, it goes up and down all the time. It just tends to go more than down. It's just
but it can drop 95% or 99% or 100%, can't it? And it may never come back, right?
Literally, it's unlikely that last time.
Well, yeah. What are the odds? I mean, I think it's more likely than not. Very low. Well, based on what?
Well, I'll tell you. There's a coin that was literally made as a joke in an afternoon. It is inferior technology called Dogecoin.
Yeah, I
Dogecoin is a copy of Litecoin, and Litecoin is a copy of Bitcoin. And basically, the difference between Litecoin and Dogecoin is they changed the logo, and they made it inflate more. And it's actually, they don't even have their own miners. They're merged mined with Litecoin, and Litecoin's trash on its own. So it's a copy of trash. And I don't even like Bitcoin that much. You know, people say Bitcoin's never been hacked. Yes, it has. The network was forked once. Somebody printed 6 billion extra coins. There was another hack that could have been executed 2 years ago where anyone could have minted as many free Bitcoin as they wanted, but the developer responsibly disclosed it instead of just minting all the free Bitcoin. I tell people the truth about the prices. Every cryptocurrency drops 85% more often than people wish, except for stable coins, and they have huge counterparty tail risk. I'm very honest about the price risk. I'm very honest about what these things can and can't do. Bitcoin's trash technology. It has very low throughput. You can never do all the transactions of the world on it. It has a very conservative roadmap. They almost never improve it. The price performance is garbage. I mean, so from the COVID dip, Ethereum outperformed Bitcoin by threefold. And
So with all those flaws, why do you maintain it's better than gold?
Well, because the price chart of gold sucks. And the problem with gold is
No, you're just looking at a 40-year price chart. You know, so why don't you look back at
how far back should I go?
Well, if you were my age, you could go further back and see gold. When I was born, gold was $35 an ounce, and now it's $1,910. So it's done pretty good.
When I was born. Well, there you go. That's the investment strategy right there, is that if you go back far enough, my investment will plan out. I mean, it sure has for me if you would have bought it when I was born.
For my lifetime. No, not.
You can't start
you know what?
by saying, I don't suggest anyone invest in it, and then come hard later.
No. Gold is a better store of value than fiat currency. And so if you want to save, I recommend saving in gold. There's a difference between saving and investing.
And
investment.
That's the weakest comparison imaginable.
But that's what gold competes with. It competes with fiat.
But okay, pause.
You know what,
Gold. Peter's big argument in this one part is that gold is better than fiat currency. Okay. I mean, is that what have we said there? I mean, I've heard the fiat currency has been criticized up and down for decades, you know, and so to now say, oh, if gold's better than that, it's like, well, okay, so what, you know?
Right, but also in what way? I mean, right now, not in liquidity, not in fungibility, not in going around and being able to exchange for goods and services. So
that's true.
To me, I think gold is actually pretty cheap right now, which is why I have about. Well, yeah, you know, that may be the case. I mean, platinum is normally higher than gold. Platinum, I agree.
But literally think about this for a second. Gold, pumping gold. Historically, gold's been taken away from people and they haven't been able to legally use it for money for themselves for a long time. So this whole notion that gold is better money and gold's better than fiat, well, people haven't been able to experience or appreciate or understand this belief of Peter Schiff for
go back to the 1900s. Remember the William Jennings Bryan political movement, where the populist movement was very big in the Democratic Party, and his whole thing was about trying to introduce bimetallic money. He wanted to have a silver and to introduce it to compete with gold, because he was saying that the elite controlled the gold supply and that they were debasing it and creating these boom bust cycles, and essentially were using it to kind of keep wages down and to restrict the supply of money, and to basically it's like a class war. And he would, the famous quote was, "Don't crucify us or me or whatever on a cross of gold."
Right.
So
I remember.
Peter Schiff, and being such a big proponent of gold, is not really considering the political, social, class implications that are embedded here, in the way that crypto is more of an egalitarian approach to money.
Right.
That's the unstated.
But I think gold is so low right now that, you know, in my personal portfolio, about half of what I own is in gold and silver mining stocks. So I have made a big personal bet. I think gold is so cheap right now. I'm investing in the companies that own it and mine it. And I do think that a mining company that owns gold and mines it and pays a dividend, that is an investment. Now, over time, gold mining companies are not the greatest investments to hold for a lifetime. But if you think there's going to be a big bull market in gold, which I do, I think over the next 5 or 10 years, we're going to have some spectacular returns in gold mining stocks. And so I have a much bigger allocation there than I do to the physical metal, which I disregard as savings. And then my other allocations, I have overweighted other hedge areas. I have my second biggest allocation is in the energy sector. So I have a lot of money in that sector because I'm particularly concerned about inflation and about what that does to the value of fiat currencies and the impact that has on commodities, all commodities, not just gold. And so I want to own companies that are positioned to benefit from a huge bull market in commodities.
Let me just jump in there, gentlemen. I think we should just change gear a little bit. And I want to apologise to everybody. The sound quality is not great at Richard's end.
Is it too quiet?
I do apologise. So it's a little bit.
No, it's on my end. I don't know.
Is it too loud? Peter's too loud.
I mean, I see red bars. I know something.
No, so I can move my lapel mic lower on my lapel. Does that help?
Yeah, that'd be good. Thank you. Maybe do that.
Just do that.
Okay, Richard's good. A little bit of a challenge with Peter, but thank you for moving it down. I asked both of you to submit a question to the other person. And so here is that question that you both asked each other. And first of all, it's Richard's special question to Peter. Peter, Have you ever thought about how much money you've cost people that followed your advice over the years, or the kids that didn't get to go to college, or the bills, medical bills that were not paid, and the loss of lifestyle because of your bad advice?
Well, I don't think I've been giving bad advice over the last 20 years. So the answer to that question is no, I haven't thought about that. Over the course of 20 years, have there been individual investments that I recommended that didn't work out? Of course, there have been. And there have been that have worked out spectacularly well. Over 20 years ago, what was I investing in? I was investing in, energy stocks when oil was under $20 a barrel before it ran up to 150. I had a lot of gold stocks when gold was under 300 and, went up to, 1900 by 2011. I had big positions in emerging markets. I avoided the entire dot-com collapse. I spent most of the late 1990s convincing people to sell their dot-com stocks. And I built my initial brokerage business based on getting people to get out of the dot-com bubble. I saved people a fortune. You should see some of the letters I got from clients who would have been wiped out, but I got them out of the stock market before it crashed. And I got them in to foreign markets. I got people out of the US dollar when the dollar index was about 120. And then it went down to 70. And, we had a tremendous, remember, for the first decade of this century, 2000 to 2010, it was a lost decade of the US stock market. And so we were able to make a lot of money by avoiding the US market. And in the middle of that, I helped set up a hedge fund to short the subprime market in 2006 that paid off, more than tenfold in 2007. Not that many advisors were shrewd enough back then to understand the problems in the mortgage market and to position people short subprime. So I've done a lot of things that have been right. What I got wrong was the decade from 2011 to really 2021. I had assumed when I was forecasting the 2008 financial crisis and warning about the housing bubble, I thought that after all my forecasts came true, that we would see a drop in the US dollar. And so I built stock portfolios that were based on a weak dollar, and we didn't get a weak dollar. We got a strong dollar. I knew that the Federal Reserve was going to try to reflate the bubbles that popped in stocks and real estate. What I didn't know is that they would succeed. I thought the world would see through what they were doing, that it would see QE for what it was, debt monetization, and we'd have a dollar crisis. Now, I still believe I'm going to be right. And in fact, my investment strategy, which didn't do very well from 2013 to the end of 2015, has outperformed dramatically since the end of 2015. So from 2016 to today, I've done much better than any of my benchmarks, and I've beaten them by very, very wide margins. But I think my clients and myself are very well positioned now for the ultimate dollar collapse that I did prepare people for, albeit a decade too early, but we are well positioned and we've had good gains over that decade. Could we have made more money if we were just in, some NASDAQ stocks? Well, up until a month ago, yeah. Now I'd have to check again because we've had some huge declines recently. But I do believe that ultimately the people who have followed my investment advice over the years, no matter what time frame they pick, even if they happen to adopt my advice at the most inopportune of times, because a lot of it depends on when you start getting into foreign stocks and when you start getting into the gold stocks, you can get it at different times. But I think ultimately it's not going to matter when you got in. I think the people that follow my advice will be in much better shape financially than the people who ignore my advice. Sure, would people have made more money had they just bought Bitcoin 10 years ago? And sure, of course. That's obvious. That's the case. But most people didn't do that. Most people who bought Bitcoin 10 years ago only put in a small amount of money because they recognized that it was a gamble. They only put in more money recently after the price went way up. And so a lot of those people are now down overall on their Bitcoin, even though they have profits on what they bought originally. They have bigger losses on what they bought more recently because they put larger sums of money. And ultimately, I think people who follow my advice on Bitcoin and other cryptocurrencies are going to be much better off than the people who ignored it because the losses are going to be staggering in crypto. People are going to lose a tremendous amount of money. Most people are not only going to lose their paper profits, but they're going to lose what they originally started with. They're going to lose their principal. The only people who are going to end up making money in Bitcoin and other cryptocurrencies are the people who sold. And then, of course, they're going to have to defend what they got away with in court because just like when Bernie Madoff blew up, all the people who lost money were looking to claw back money from the people who gained. And I think the same thing is going to happen. Not that I necessarily agree with it or not, but I know how the world operates, and there's going to be a lot of people pointing fingers. And unfortunately, after the horses leave the barn's door, the government's going to try to close it. I think a lot of regulations are going to come, unnecessary regulations in the legitimate part of the financial industry, because so many people are going to lose so much money in crypto. It's going to give capitalism another black eye that capitalism doesn't need, and it's going to allow the government to say, "You see, look what happens with capitalism. People get conned, people lose all their money," and they're going to say the solution is more government, which of course is not. That's simply going to make the situation worse.
Peter, you're still going to stand by the fact that you were stating very publicly that crypto, Bitcoin, will go to zero. Are you standing by that?
Well, I've been saying that for a long time. Eventually, sure, it's going to go to zero. It may take a while to get to zero, but there's not going to be much of a difference if Bitcoin goes to 100 than zero. If you bought it at 40 or 50,000, if it gets anywhere near zero, it's going to feel like zero.
Richard, did you want to respond to that?
It's very simple. Peter has a lot of parade of imaginary variables. Everything's going to go wrong. You can listen to Peter. Peter doesn't look at the chart. Does this look like everyone lost their money? There's dips. Those are people taking profits. Those are guys getting cashed out. Those are guys getting rich and buying yachts and golf courses and jets and Ferraris and Lamborghinis and you name it. That's what those dips are. And these are big dips, guys. These are 60 and 70% dips hiding here. But 60 and 70% dips don't matter when you overcome them with 500 and 600% gains. Cryptocurrency is a world of free money. Free money. As a Bitcoin holder, you got hexed for free. When I mined Bitcoin, it was free. I double-clicked the EXE on my computer. As a hex holder, our community received free Uniswap token, free 1-inch token, because we use these products and we were just giving the coins for free. We received free Gitcoins. We received tons of free coins out the yin yang, literally free money. And here's what's weird about crypto and about me as a person. If you see a guy drowned in jewelry and covered with all this spectacle, your brain would be right to say scammer. When you see charts of 1,000,000% returns in 2 years, you're right to think, oh, it's got to be a scam. And you'd be 99.9% right. It would save you a lot of money and a lot of work, and it would save you a lot of pyramid schemes and a lot of scams, and a lot of Ponzi. It would save you all that. But you would also miss that one rare little sliver of world change that actually happened. Amazon dropped 95% in the year 2000. 95%. You could have pointed it and said, look, late stage capitalism, Ponzi scheme, pyramid scheme, greater fool. What can you do with these shares anyway? You can't do anything. You can't affect the company. You're just hoping to sell the greater fool, which is all the shares, by the way. And guess what? They're over half of all the commerce in the United States on the internet. over half of all the money made on the internet goes directly into Amazon's pockets, even though it dropped 95%. And so this new paradigm of massive drops with massive gains is what the future looks like, particularly when the money is more and more fake. The reason all these charts are so easy to go up and right is because of the price of the dollar. And the dollar just gets worth less every day. The dollar is mostly garbage. You only occasionally see it go up in value right when the stock market crashes. And the stock market used to crash every 10 years, but they decided to skip a cycle and just print their way out of it. So I've created something that is one of the few things in the world that can change man's relationship with government. You don't have to beg the government to give you their fake inflated money. You can use your own money. It's peer-to-peer. You can trust math.
You can use your fake inflated money instead. But you gave away a lot of coins for free. I could read the chart. It charges not over.
Hit pause there.
I don't want to scam people. I don't want to take advantage of people. I don't want.
Fake. You're fake inflated money. Okay, here's the thing about that. If people are allowed to choose which medium of currency they want to use, that kind of reduces its fake nature, right? We talk about legal tender laws and the way they support fiat currency. You have to pay your taxes in this medium of exchange by law. You have to accept it by law for payment. That's something that sounds contrived and arbitrary and artificial. If you take the support away, is there a network there?
Right.
Who knows? We don't know because we won't take the support away. So it's open. I assume there would be a network, but who knows? It's an open question. But with this, people are coming to it organically. No one's saying, hey, you have to use Hex. You have to buy Bitcoin. You have to use Ethereum. These are organic ecosystems that are emerging bottom up because the users want to use them. So to say it's fake, it's like, well, maybe in the sense that everything's fake. Every money is fake. It's a convention. It's based on our beliefs and it could change.
Sure.
But so in that sense, yeah, tautologically, yes. But let's look relative to what is always the question. What are we comparing it to? And how fake are monetary regimes that are supported at the point of a gun through legal tender laws?
He should be knowing this from his background and complaining about the problems with fiat. For him to say, well, if you can choose between these two, well, Peter, if you could choose between fiat that everyone is just printing and you don't know from one cycle to the next, or this one where the code is law and it's set to this rate, if you could choose, which one?
It's pretty obvious to me.
I mean, it's pretty obvious to me too. If you could choose, which one you would choose. So that's pretty funny.
I want to make money.
So let me ask you a question. Since you're such a nice
let me finish. You can ask me a question in a second. Let me just ask you this. I want to make this point. You gave away a lot of free Hex, but the reason that anybody made money in Hex is because somebody came and bought it. There are people going into the market buying Hex with actual money, with fiat currency, whatever they're using, Ether, whatever it is. And the only reason some people who got free Hex were able to sell any and buy a yacht or a mansion is because some other fool bought that Hex from them. That's the person who's going to lose money. They put real money into your fake coins and they're going to lose because that person thinks he's going to sell his at a higher price at some distant point in the future. But the reality is he's never going to sell them. They're not going to be worth anything because nobody's going to want to buy them.
This is the guy that's always been wrong about it.
Okay.
The chart doesn't lie, bro. The math is real. You can see
I'm not saying that Hex hasn't gone up from the day you created it until right now. So let's see what that chart looks like. Let's see what that chart looks like 10 years from now. Let's see what it looks like. I mean,
pause there.
Now he just
Peter,
said, I'm not saying you haven't been successful the last 2 years.
This far, but the future,
I'm just saying you're not going to be successful. But he just admitted he's wrong. That I'm not saying you haven't changed people's lives for the last 2 years.
Well, here's what I would say to Peter. He still hasn't gotten it.
Yeah,
that the world has been suffering under a monopoly credit money system that's been like that for hundreds and hundreds of years, different iterations, different names, different styles, different regimes, but it's always been some burden that's been imposed on the masses in some way or another. This represents an innovation in that, in a way that an institutional evolution, in a way that frees up people to experiment and to create their own forms of currency. There's a book by Hayek, F.A. Hayek, the great Austrian economist, called The Denationalization of Money. And he talks about how the problem is the monopoly, that if we had a competition in currency, we could separate the nation state from the money unit and just let private monies emerge and compete. And we would be able to apply the entrepreneurial dimension to the money question. And then the idea is that there'd be a much better outcome. And he points to the past with the mint, the royal mint and the private mints in Britain in the past, and how that was a successful experiment to repair the scarcity of money that had been created in that period. And so there's a precedent for this. But the point is that in the monopoly system, monopolists underprovide things. There's always a reduced supply versus what the market clearing rate would be under competition. And money monopolies involve a scarcity of money. And even though we don't always see that because of the prices going up, the way that the demand for money in the economy exists, that's always an element. There's always a scarcity of it. So the ability to open up the production of this medium to competition, so that the supply of money can be dynamically responsive to the demand through competition, right? That's a much better outcome. That's a much better institution. That's a much better monetary institution. Sure. So to not understand how crypto and blockchain open up the possibility for that and to not see the value in that, I don't understand it from somebody from an Austrian gold bug background. It doesn't make sense. It should be obvious that this is an innovation, even though it might not be the final form. There might be problems that we need to fix and resolve. It's still the only pathway to monetary competition that we see that's open to us. And to not understand the value in that, to not acknowledge it, is just bewildering.
Yeah. And to take that further, like you were saying, look, now, instead of needing a proof of work miner, now instead of needing an access to a large amount of capital to have 33 ETH or some large amount for a proof of stake work, now to open up this new mechanism to where everybody who has time, a relationship with time, has equal access to this new inflation. That is the most decentralizing, equitable distribution of a new money than one could design. I can't imagine, hey, this is the age of Aquarius. So, time.
It's a sea change.
Saturn,
we're talking about something like
pretty cool.
It's every bit as democratizing as the printing press changed how information flowed. Right. It put reading and literacy in the hands of everybody. And this is and we're seeing finance and money go through a similar kind of evolution in this time. So it's definitely a beautiful time to be alive. It's exciting. And it's kind of crazy that this is not being recognized by somebody who should be on the side of freedom and competition and liberation. So yeah, it's definitely interesting. I don't know how to say it. But
as far as the technology goes, I know this is a bit of an astrological aside, but Aquarius is ruled by Saturn, which is Kronos, the timekeeper, and having a money that is a currency, right? And it's an air sign for spiritual growth or so to understand that we've got this new money that is distributed based upon time equally. And it allows for a growth that prevents certain resource allocations problems that we've had in the past that really treats people in a more egalitarian, ethical way across the board. So there's something beautifully liberating, and that this technology brings the potential to change the capital structure changes when you bring, the new money into people's hands.
Yeah.
So
no doubt.
So power through the last of this.
You could have shown me a chart of Beanie Babies at the peak. You could have shown me a chart of tulips if we were in Holland and said, look, tulips never go down. Look at this chart. The chart doesn't lie.
Did those bubbles come back?
Tulip bubble, no, it didn't come back. The crypto bubble's not going to come back either. Once it pops, it's come back.
Gentlemen,
no, it never went away.
We're
it just
running
had
out of time.
big peaks and troughs.
We're running out of time, and I want to get this last question in. Peter's special question to Richard. Richard, how can any non-backed cryptocurrency be a long-term store of value if it has no underlying value to store? How are any cryptocurrencies really scarce when there are already almost 18,000 different coins to choose from and the supply grows every day?
Right. See, this is what people get so backwards. People think that inflation is always bad. It's not true. Bitcoin's greatest gains were when it inflated the best. As the inflation of Bitcoin has gone down, the gains have gone down. And so what matters isn't just looking at the demand side. You have to look at the supply side and the demand side both. And so when you look at altcoins, as a maximalist, Bitcoin maximalist old one, I would say, God, all these altcoins, they're going to destroy Bitcoin. But then in fact, the altcoins and Bitcoin went up and down together. And the more altcoins that existed, the more valuable Bitcoin became. Because they're not replacement products, they're complementary products. They amplify each other's utility in many cases. And so history shows and proves, by the way, as you add more stocks to the stock market, as the value of stocks going down, look at how many stocks you can create. It's going to drive all the other stocks down. It's the dumbest logic I've ever heard of.
They're different companies with different businesses, different revenue sources. All these cryptocurrencies are the same. They're competing for the same market share. Yes, they are.
Wrong. You're 100% wrong. Bitcoin doesn't have stablecoins. Bitcoin doesn't have smart contracts. Bitcoin doesn't have NFTs. Bitcoin doesn't have options. Bitcoin doesn't have leverage trading. Bitcoin doesn't have the ability to log into other websites. Bitcoin doesn't have play to earn games. Bitcoin doesn't have any of it, which is why Ethereum outperformed it 3-1, and why I'm making a copy of Ethereum. Where you keep all your coins.
How many other coins can do what Ethereum does?
And the value will keep going up because you think they're replacement products. And they're not.
Notice how Schiff doesn't admit he's wrong. He says something that's wrong. he says they're all the same. And then Richard Hart clearly explains you don't understand what you're talking about because they're not the same. And Richard Hart is, as from an economics perspective, and we're just speaking like from a market economics perspective, Richard Hart's answer, an economist say that's actually right. That's actually how it works. They're not competing by having these other crypto assets that can do more scalable, more secure, more private. You can build smart contracts because they can do other things that Bitcoin can't. But you need Bitcoin in order to access these. It adds value to the Bitcoin, and they increase value together.
You can do more with it now. Yeah, you can bridge your Bitcoin onto another chain.
So Richard explains, Peter Schiff, you're just wrong. What you said is just factually wrong. It's just ignorant of how this technology works. Then Peter Schiff just says, well, yeah, but how many other things are like Ethereum? In other words, he doesn't acknowledge that what he said was empty and wrong. And the next comment he makes still is that same fallacy. Great. There's another Ethereum. Great. There's some other network trying to add value and trying to, soak up more market. But it's
almost like Peter is not interested in an investment unless he knows that he's guaranteed a monopoly, maybe an IP, some IP, or some barrier to entry. Right.
Right.
But
like, how can I guarantee I benefit at the expense of others? What's my guarantee?
It's like do the Venmo people know that PayPal exists? I mean, it's okay. There's enough room for more than one. It's a big world. Commerce is a big space, and the amount of, we have Visa, MasterCard, and Discover. So even in the traditional system, there's room for more than one supplier of a service that's similar to others, right? And it's not. And yeah, they're competitors to some extent. I mean, sure, you could see that Ethereum is a competitor with other smart contract blockchains like Solana. There's some competition there, but to suggest that that's not a good thing is mistaken, because that's what we want. I'd be like, Peter, read Hayek. We want competition in currency. Right. This is the goal.
Yes,
you've missed the boat here, buddy.
Not as more stocks and more companies were added to the exchange.
As you said yourself, they started Dogecoin. They started Dogecoin as a joke, and look what it did. Doesn't matter.
It beat Bitcoin. It beat Bitcoin.
Yeah, that just shows how ridiculous it is. Because they follow joke. That's the joke. There's no serious coin. The joke is on the people who are owning these things, who are hodling these things. They're going to wake up to the stark reality.
The joke is the dollar.
The dollar is flawed.
For him to say Dogecoin was created as a joke and Dogecoin is doing well, therefore all the cryptocurrency market is a joke, is just, there's no, that's.
You know what I would say? I'd flip it around. This space is so revolutionary.
Yeah.
People are so fascinated with it that you can even make a joke product successful, because that's how much interest is in this space, because people understand how revolutionary it is. It'd be like if you were, that even the bad projects are doing well because they're a part of it, right? That's not a bad thing.
And that's a little bit disingenuous. I mean, you're right, but I would say his comment's disingenuous because when you look at Dogecoin, you've had Elon Musk, I don't know, weirdly
hyping
enough,
it. Yeah.
I don't understand why, but you have Elon Musk, Mark, you have certain people come out and pump it that have a lot of sway with pop culture and mainstream media, perceived to be great minds in science or finance or what have you, and say, we think this is a great innovation and we're going to use this or accept this. So for a lot of people who don't spend the time to understand how the technology works or the tokenomics and what makes one a joke and one a little bit the tokenomics stronger, more sound, then they are drawn to this. So there's an element that seems to be propaganda,
Sure.
What's your bank? Everything's a joke now. Do you want to play the jokes that make money, or that you can complain about all day while everyone outperforms you? Everyone's outperformed you. Coin started as a joke, outperformed you.
No, they haven't. Most people who bought Bitcoin are losing money. That's
Elon Musk owns more in Dogecoin than your entire net worth. Please be quiet. Elon Musk also owns, the richest guy in the world, also owns more in Bitcoin than you own.
Yeah, you know what? Maybe he did it as a joke.
He's smarter than you.
I'm not claiming to be smarter than him, but you know what? He probably doesn't give a damn if Dogecoin goes to zero or Bitcoin goes to zero. But a lot of other people do.
Promoting Dogecoin because they feel it's inferior technology, whereas I have designed superior technology. Dogecoin is still proof of work. Why are you destroying the environment? We don't have to.
Yeah, but proof of waiting is nothing. There's no value to just waiting.
Yes, there is.
You're waiting for nothing. No, there isn't. Nothing's happening. The reason that there's value in saving.
To say there's no value in just waiting is missing the whole value of the time preference, because
it's not just waiting. It's not just waiting. Much of what's going on in DeFi with staking is about providing liquidity, making markets. That's not what's happening with Hex, but in general, that's often
even the weighting is it captures the point is that hex captures the value that people do play on time. The fact is a dollar today, Peter, you understand in traditional finance, you take finance 101, a dollar today is worth more than a dollar tomorrow, and is worth more than a dollar in a year.
Yes.
More than a dollar in 3 years. So there is a value placed on time. Who are the people out there that benefit and capture this value? And where is that spread? Where is that money made? Who are the people that are out there capturing that spread? Now, hex, the value of hex, that purchasing power, that value is captured and transferred from those who lock up and burn a supply today. They're taking it off the market by code. Anyone can look it up. Look, this is how much is off the market for 1 year, 2 years, 10 years. They're taking the value of that inflated supply and having deflated, that actual value is now passed on to those who are using it for consumption today. So
that's right.
There is a service like economics, the opportunity cost. It may be the unseen. It is unseen. It's not direct. That's what economics is supposed to study. I mean, that's on Peter Schiff. Come on, this is where what separates the economists from the accountants or the financial analysts, because some of these things you can't.
You have to look at the counterfactual and see, what's like what you say, the unseen effects.
The unseen effects, right? If you're replacing security industries, all the banks that have to store your money, and you're replacing the counterfeit industry, now you don't have to hire people to protect from counterfeit. There's no loss of value to all the people out there holding money, to all the counterfeiters out there, just completely wiping all of that, or the energy that's used. How fiat may be costly in other areas. When you replace that and make more efficient, while it may not be as easy to account for on the books, that's a real savings. That's a real efficiency gain. And here in the same regard, when you take people in X and they have to take it off the market today in order to earn that inflation, they are passing that time value for however long they lock it up. They are in that moment passing that value down to whoever has it and whoever wants to take it today.
Whoever wants to cash out.
That's the innovation. That's the value. So those people who are delaying gratification are directly adding value to those who would like gratification in the moment.
Well, one way to say it in economic terms is that they're creating a game theory where you're incentivized to hold that currency unit, to have a greater demand for the money, which reduces its velocity, which does the very thing you say, promotes the price stability for the people who are locking it up or cashing out or whatever. It's taking that supply off the market, and that locks it up, and then that supports the price. Right. So it's a game theory that actually helps the people down the road or the people in the present have a better price. Right. It's about creating a more harmonious incentive structure. I feel like that's a good thing. Why should it be criticized for that?
That's my point. Is why are you criticizing that if there's a transfer of value for those who lock it up, and that for those who get to use it in the moment, in the present? That's how time preference works. That's the value of. I mean, it's a good thing, like you said.
Yeah. Because you're delaying gratification and you're making your savings available to entrepreneurs who can invest it in capital formation and growing the economy. There is nothing at gain. When people sit there and hold on to their hex coins, there is no capital investment that finances. Nobody benefits because somebody is holding on to hex except the people who sell.
Yeah. So Peter doesn't understand how banks work. Let me prove it.
Sure I do.
Yes, I do. Peter, when you deposit your money at the bank, what happens to it?
Well, the banks, I put my money in the bank. Now the bank can lever it up and they can make, maybe $10 worth of loans or $100 worth of loans every dollar.
So he changes the answer. He's been doing some debate prep. You're not giving us.
I can change my answer.
So your usual answer is that they lend it out and then you make interest on it.
They lend out a lot more than you deposit. We have a fractional reserve system.
That's right. Yes. So what's funny is Peter must.
Richard's right. Just to be clear, Peter usually just says you loan your money, you put your money in the bank, and then they take that money and then they go out and make investments. And that's what the point Richard Hart's making is that
they don't do that.
They don't do that. And Peter Schiff, usually that's his quick answer, is that how the system works now is you go take your money and you go put it to the bank, and that's what a CD, that's how they pay interest. That these bankers, these intermediaries, they take what you give them and they go out and they're entrepreneurs and they invest in real estate and they invest in these companies, and then they make money, and then they're able to take what they've profited from
and give you a pittance.
And that's what he's implying. He just got through setting this up with CDs. They take your money and they invest it, And this is the double speak that Peter's doing throughout the whole time. He just said that's what's being done. And now he's going to say in the same breath, but with different words, that, well, no, that's actually not what's being done.
Not how it goes.
And Richard Hart is about to explain what happens. And you'll watch Peter Schiff conceding.
Prepare for this debate, because usually says gold's useful in times of strife like war. We didn't hear that argument, which I'm ready to crush immediately. He usually says that when you give your money to the bank, they lend it out, and that's the reason you make interest. But now he's saying they lever it out. He's changed that answer.
Well, but because they lend it out, they can pay you interest. That's where the interest comes from. But they lend it out.
Interest comes from inflation. So your money never gets lent out. Your money stays at the bank. You give your money to your bank keeps your money, and it sits there, and it never gets lent out. And instead, what they lent out is inflation that the government gives them for free, because you met the virtual fantasy world of some reserve that they change.
Yes, you provide the reserve, and then they can lever it out.
Right.
Yes, I am not a fan of the
Inflation,
fractional bank.
exactly.
That's not how it works.
So we agree on this. Watch this. We're going to agree on this. The yield that you get from your bank is from the inflation that the government hands them. And so your yield that your bank account, which is pitifully low, is from inflation. And guess who else gets rewarded inflation? Bitcoin miners for destroying the environment. Ethereum miners for destroying the environment, which also luckily maintains the consensus network. And
that's why I don't keep a lot of money in my bank. I recognize that. I don't want inflation to rob the value. I'd rather own gold, but I'd also rather get good dividends on companies that I think are good investment values.
So when your stocks go up in price, who are these greater fools buying your noob stocks that you don't even actually hold the shares?
I don't even have to sell the stocks. I just collect my dividends. I get my share of the profits. The stocks I own.
Where do the dividends come from?
From the earnings of the businesses. People buy their products. They use the services. But they're not fools. They need the products. So if I own stock,
there's no value.
Let's say I own a chain of supermarkets, and so I make money selling people food. You tell me the people who eat the food don't need it? They don't want that food?
The reason people want food is because they don't want to feel hungry. And the reason people buy gold is because they want people to like them. And the reason people
they buy gold, they buy food. Right. They buy food because they don't want to starve. And they buy gold so they can buy food in the future. You can't store your food. It's going to rot. But you can store your gold and use that to buy food in the future.
Gentlemen.
But you can also store iridium.
Gentlemen, it is time. I'm sorry to stop you. I was hoping you could punch out. It was very nice.
That pretty much sums it up. The last point.
One thing I'd
money's paid out. The inflation of how new money is
yeah. I think Peter Schiff is working off of the very, very simple textbook, 1950s textbook econ explanations of how banking works, where a bank takes a deposit and then they hold so much amount of that in reserve, and then the reserves go up, so then they can make new loans off of excess reserves. And there's this reserve ratio they have to maintain. And in reality, like that, we learned all that. I mean, this was part of our intro to banking, and it's not how things work. Maybe at one point that was closer to how things work, but in reality, deposits are not assets that are treated as fuel for new loans. In reality, they're liabilities, and loans. Banks just create loans when they feel that there is a profit opportunity. And in the loan creation process, that's how deposits come out. So deposits are created through loans and not the other way around. Now, and the other thing is that I would even disagree with Richard on is that banks don't get the inflation from the government. The banks do the creating of the money themselves, right? Most money creation is not happening at the Federal Reserve. I mean, they do create some money, but the vast majority of the supply of the money that exists is privately created at the commercial bank level when they make a loan. So that's where the money creation comes from. And but he is right that it's an inflationary thing. But what needs to be said is that when they create that new money and they make those loans, they're the ones keeping the profits. They're not passing those profits down to the CD holder. The CD holder is getting a pittance, a fraction, a tiny fraction, an insulting fraction when you look at it. So this whole mechanism has been reinvented in the service of the consumer, the CD holder, and in a way that the traditional banking system simply cannot match. And I don't think either of these people has as accurate an understanding of the banking system as they should. But I definitely think Richard's closer to the truth than Peter on that.
Well, and you can't expect everyone. No one knows everything about everything. We all have our specialties, and you can understand enough about a system being flawed. You don't have to understand all the details of its flaws to serve. There's clearly a problem with the way the inflation mechanism works, and Richard's definitely closer in his explanation, a lot closer to how inflation is paid out with those Cantillon effects and how certain people are able to benefit from creating that new money at the expense of others and benefiting. So when you look at the technology of crypto, Bitcoin, or in particular Hex, even more, it's having to take away that privilege, the privileged class that is allowed to create money. And while it may be at the commercial bank level, the Federal Reserve, private banks at that level do as well, and they make the rules and affect how much can be done at the commercial bank level too.
Yes, for sure.
But that is absolutely has been part of the problem. We look at asset bubbles, whether it's in real estate or .com, a lot of it is always revolved around not just this hyperinflation of the bubble, the printing of money, but also the markets and where it goes. And now we come back to, well, who's allowed to print it, and what they do with it has a large effect on where the bubbles are going to happen. And
I'm glad that you say that, because it goes back to something I remember reading amongst the free banking theorists, the George Selgin, Larry White, that school of thought. They always made the claim that it wasn't fractional reserve banking or just increases in the supply of money that were the problem, but monopolized fractional reserve banking, or monopolized increases in the supply of money and then distributed and injected in certain ways. So the idea is that it's not new money that we should be fearing, because in a free banking system, there'd be various currencies that would be all creating new money, but it's this monopolized, forced, controlled system that's the problem. So I think that's a good way to close it, is that Peter talks about all the different competitors, the altcoins, and wonders why they don't why they don't just have an unlimited scarcity, which means that it has no value. But what he doesn't realize is that in a natural setting, there's no reason for just one, that there's going to be a lot of uses and use cases that we can think of. And entrepreneurs are going to find a lot of different mixtures of attributes that they're going to want to test. And people are going to see valuable things in different offerings. And not all of them, of course, will be valuable in the long term. They might not all be around in 10 or 15 years. But we know that there is no reason for just one, that one currency is not the natural outcome. And that if you leave people free to choose, there will be a whole spectrum of assets that are valuable as money substitutes. And it's natural, and it's better in the long run if we get to experiment and see which of those pay off and play out and end up being the right one for the future, for our needs.
As important as money, you want redundancy and resiliency. You want resilience and redundancy, right? Because if it turns out there's a hack or a bug or an issue with this bank or this institution or this crypto, or it would be devastating if the whole world or some huge were dependent upon this one crypto or one.
Well, I'm old enough to remember the scandal of the London fix a few years ago, and I'm using that phrase in a jokingly way because it wasn't that long ago. But in the world, 5 or 6 years is a lifetime in the financial political world, right? With the way things moving now. But it wasn't that long ago that the scandal was the price of gold was fixed every morning by a small number of bankers in London across a few institutions. And that had been done that way for generations and decades, and that it was being gamed, that the fix was being gamed, and that there was some corruption and there was a scandal. You might remember the Libor scandal was around the same time. The London interbank overnight rate was also being fixed in a part of this. There was a big lawsuit, a big scandal came out of it. And this is the gold market, the global gold market.
Right.
So this is to say that there are political corrupting influences all throughout finance, even in the gold industry, and that the future,
especially in the gold industry,
and
you bringing this up, and Peter Schiff talking about the price of gold, the idea is that there should be more talk about how much of this gold is paper gold versus the actual physical gold out there.
That's right. That's another element. Yeah.
And the leverage in that market. So, a lot of the critiques on crypto or blockchain and the paper profits, it's like, well, you can
have this, we can lay those at your feet too, Peter.
For sure.
Yeah. Well, I think we had a good time. I know this is a longer video, but this is a subject that we both really love talking about, love thinking about. And we could do another hour, I'm sure, easily on it. But
and I'm sure in the future there will be other people debating, or other people from traditional markets and from blockchain and crypto working to defend or argue or explain this new knowledge and this new technology. And as we understand and learn more, we will do our best from our perspective to share that research and understanding, because that's what this is. We're in a time right now where Prometheus has brought down a new technology for the world. And some people understand it more than others, and some people understand its potential. And that's what we're trying to do. We're all here trying to educate, enlighten, teach each other, learn how we can use this to make the world a better place. And, it's from understanding the problems that you can see what are the solutions. And that's why it's good to understand, how does the money work? How does this new inflation, and what are the problems with the current inflation model? If you understand the problems, then you'll see the real value that something like a hex seeks to displace or replace or fix.
That's right. So yeah, it helps to know the problem to value the solution, right?
Absolutely. And we look forward to sharing more as the new economy. There's a new economy forming, and these are exciting times with competing currencies. I would say the fact that countries are talking about Bitcoin or cryptocurrency as legal tender institutions, that it's even a conversation for Peter Schiff and people in that camp should just admit, wow, this is a big deal.
We've turned a corner here. Yeah.
We've turned a corner. You can't, I mean,
yeah.
Tulips or what? This is definitely a big deal, not to ignore anymore. I think we covered about as much as we can on this video.
I think so. Yeah.
All right. Well,
it's been a blast.
You know what to do if you want to catch more on the Macro Outlook playlist on how to get involved in different blockchain and crypto projects that may be innovative and may be adding value in many ways. Do your own research. None of this is financial advice, legal advice, commercial advice, marital advice, medical advice. It's just educational, entertainment information, sharing our research and perspectives, hoping that it adds value somewhere in your journey in understanding the blockchain and crypto revolution, evolution, potential. And by all means, drop those comments. Let us know what's going on so we can research that and add to our understanding.
That's right. Well, till next time.
Have a beautiful day. Namaste, y'all.
Thank you.